I have some time to do that, I hope. Start new. All right, let's flash back. I thought that NVIDIA was breaking right here, okay? I thought we were going straight up to 200. Wouldn't surprise anyone, but that didn't happen. So what did I have to do? I started with what I call a flyer contract. 1 or 2 contracts right above, just so I don't miss the move. But watch what happened. Boom, I got taken right down. So what do? I just step back and reassess for a while and don't do anything crazy. Now, usually what ends up happening is NVIDIA will go down and sideways until some big announcement. They have big announcements all the time. And guess what? Their conference is going to be, or just happened. So I knew that was coming up into the future. Watch, we're going to keep going sideways. At this point, I'm more confident than ever because we kept this 50 moving average line. Sure, some heart palpitations during these wicks over here, but you know, if you're going to do this, you got to weather the storm. You know, this isn't for everyone, but you got to weather the storm. You got to stick with your plan. And my plan is this is getting to 200. So what happened? There it is. There's your big volume. You see it right here. There's your breakout right up to 200. Cool. Out of the trade. Now I have runners going all the way up. So from here, right, start to get rid of the runners and now start to plan another trade. Okay. If NVIDIA gets down to 200, I think we can then swing back up to 212 or even 220 right here. So again, this is another measured move. Same thing as I did with Archer and same thing I did with Apple. It could even go a little bit higher. You know, the next measured move after this, I'd have to make another one. But think about this, right? NVIDIA, it keeps getting, and I can't actually believe this, $350 price targets. Think about that. The stock is 200, $350 price targets, right? And it keeps getting them, not one, multiple. So if this stock can get from 200 back up to 220, I'm not asking for a lot. I know it's 5 trillion. It will be 10 trillion at some point. Economies of scale, big companies keep getting bigger by buying small companies and innovating, right? More investment coming in. Now, this is where we are. Now, I have an idea that because of overnight, we went down to about 192 or so, and then we came right back. It's going to do something similar to this. And so as we go forward, now we're in present day, okay? I have an idea that this will keep going, or what will end up happening is it will do something like this. And then we get closer in this little rectangle, and then we pop out again, okay? And then we keep the 20 moving average will come up, sweep under it for support, okay? Letting us know that there is a safety net right below it. That 20 moving average is going to sweep right up. And then we can then swing trade that up to our next level. And if you're wondering how much money can that possibly be, well, I'll gladly show you again, right? And that would be NVIDIA. And again, I'm going to do a December and a January. Going to just pick December first because it just will look a little bit better numbers wise. And I do a January just in case I have to wait a little longer for it to materialize. So now I did the 235s. I think have the most volume, has a good open interest. This is me just shopping around what has the most volume, most open interest. And in Tradier Pro, obviously you guys can make the dashboard however you want. I just did that. But sometimes just habits of just, you know, shopping around myself. Wow, 77,000 open interest here. And the 240s are 343 and 20,000. I'm going to do the 235s and stick with those. A little bit out of the money. Good action on those, right? Volume plus open interest equals the word action. We need action or this doesn't work at all. Now, as we go and check this out, we said what? It can get to what price? 212, maybe even higher. Why 212 though? Because that's its last time it got up there. That's the high, 212.80 or so. So if we go back to 212, we will see that hey, look, you know, this is 212, a little bit beyond that. It's about 100% or so for a 5.8% move. I have a feeling it's going to be even more than that because implied volatility always spikes when NVIDIA runs. And what happens when implied volatility spikes? Vega spikes and everything spikes. Watch. Boom. I don't think it's going to get that high, but, you know, you just for effect, you know, it just, everything gets bigger. So we get to 212. We'll be at least at 100% or so. And if I keep buying more, hey, a double is a double. I'll take a double any day. So we don't need to knock out 500 to 1,000% trades all the time. But you know, this is a nice one. You know, you have security in this. And again, if you're nervous, you can take near-term insurance puts. You know, if you are feeling skittish about the overall market. So if it dumps, you will get a lot of your money back. So, you know, I think Apple and NVIDIA for right now are really good. And, you know, at least strong names. The president's going to be talking and about, I think at some point, maybe he is right now, about the economy. He had some pretty strong words this morning that the economy is going to be back. We had some profit taking yesterday. People got skittish about Bitcoin. But until we really roll over, we should be fine, right? Where's SPY right now? We should be fine. So overall, you know, those are my two that I like, and I always look for ones like Archer. You know, going from overall market structure to popular industry to then stock. You know, what is the best stock, and then what is the best stock to play with options. From there, that is how we do it every single time. Okay. Now, again, we have a really strong day today. That 20 moving average on SPY is just really helping us out. Great guideline. So again, we can get back up to maybe 694. But if we do, be careful. This likes to be, you know, choppy now, and when it gets up top. So, you know, don't be taking out huge positions when SPY is at its absolute tippy top of, you know, this huge channel that, as you can see, went all the way back to, I don't know, like June, May, something like that, when after the April dip. So we're this huge channel. Again, it's good to be entering when SPY is lower, bouncing up instead of, you know, at the top here. And what if we get above this channel? It would get to here. So that's where our next level could be.
I'm loving the jargon you threw in there. We've got tippy top, heart palpitations. It's kind of covering the bases. I'm loving this.
Yeah.
It's a great program. Wow.
Yeah, I get real. I do this every night for like an hour and a half with my group. Shout out to team Trader Daddy Premium that is on here right now. We really take it to another level every night, and you know, we develop our own watch list. We develop our own things every night, and then we really get into the structure of how we're setting up these trades. So yeah,
and to Craig. Yeah, so really well explained, and that's so if you guys know, that's Trading View, and so just explain where we can find you and reach you, so that the world knows.
Yeah, super simple, right, guys? You can just go to Google and type in Trader Daddy NYC, and you can find almost everything you want about me. You'll see my website, which is thetraderdaddy.com. And you can contact me through my website. It will go to my email automatically. There's articles that have been written about our group in Business Insider. You can read those. Usually just going to Google and putting in Trader Daddy, you can basically see almost everything about us here in New York City.
And if you see two girls talking to Kardashians, you've hit the wrong website, right? That's Caller Daddy. Okay,
yeah, you have to be careful when you start throwing in daddy and .com. So, you know, if you're still interested in the trading aspect of all of that, you know, you can go to the traderdaddy.com and we can get that part at least taken care of.
Love it.
You have the best name of the day, though.
Yeah, that's good.
We we voted on it, so that's good to hear.
I love it. I love it. Daniel, thanks so much for that. That was awesome. Really great analysis. And you also have, I think you said this, presence on Discord or Reddit. You have groups there, one or the other, or both?
I have a, let me see if I have it. Shout out to the WAP group. I have a group that looks like this, and it looks like Discord, but it's in WAP. So our premium group is all here. As soon as you guys are in, you'll be right in it. It's its own app on WAP, and we have everything right here. I live in this 95% of my day. I live in this all day.
Got it.
Yeah, and if you haven't heard of WAP, don't worry. Those WAP.com for all of us who was born before the personal computers.
It's like school.com. It's a place for communities. It's growing fast though, so there's a lot of us on there. But yeah, we can customize our own apps on there. So when we put our own, we're making one for volume that comes in for breaking certain levels, and then you'll get an alert to your phone when that's happening. So you don't have to just stay and be glued to the chat all day. So we get to really customize that group a lot more than anything else.
Awesome. Great. Well, that's awesome. So TradierDaddy.com, right?
TheTradierDaddy.com. Or you can just Google Trader Daddy and New York City, and you'll get there rather quickly, and you'll find me.
All right, man. Thanks, Daniel, for coming on. We really loved it. So we'll
appreciate it
next week. All right, man.
Thank you so much for having me.
Daniel.
You bet. All right, Mal. Moving right along. So I'm going to see if you can pronounce this next name. I know it. It's OVTLYR, but kind of like Bulgari, right?
I feel like yeah. So this is his actual name. I feel like Elon named him.
Yeah, that's right. Or it's the Roman V. The next group, Christopher and Mahesh from OVTLYR, are going to go, and there's been a lot of chatter in the comments about these guys. Man, they're bringing the audience. So here we go. Bring them on, and let's get busy, guys.
Go.
Hey, thanks for having us, Mahesh. I'm glad we're taking over.
Hey, thanks for all the love that our members are showing. And I can promise this is not by design. It just, everybody's excited. So this is not like planned.
Well, I can tell you what they're excited about, Mahesh. They're excited about this chart that I'm going to put up on the screen right now. They're excited about this plan. Trying to hit the present button. There it goes. Okay. They're excited about this plan right here. This plan right here is changing lives. Like legitimately, this plan is changing lives right here. So we have a team of over 20 PhDs, data scientists, actuaries who helped us develop the buy and sell signals that went into this plan right here. And this plan back tested a 1,140% return in just 5 years. That's taking a $100,000 account and making it $1.1 million in 5 years. What do you think about that, Mahesh? That sounds pretty good, right?
I feel great, and I just want to add one more thing to the introduction. Those who do not know us, we are a team of basically what Chris explained: team of math nerds, people building tech, building PhDs who have experience in data, investment, trading, and all that. So we are not just building this unique data, strategies, analytics. This is just a little bit part of what you are going to show here. We have like full-fledged platform with the ecosystem that we are building of Trader. Like we have this big trading community where people help each other. We love data. So it's not like, hey, let me get into this trade because my gut says so. So because of our background, we try to we try to present something when it is like tested, back tested, making sure it's not just our gut feeling. So that's a big part of what we are building. Of course, we are doing so many different things within our community, and it's growing like crazy every day. But I'll not waste time on that. Let's get into this plan.
Well, we only got 25 minutes here, Mahesh. And so what I wanted to do is I wanted to go through our plan right here. Now, we go through this plan every single day, live on YouTube twice a day. The easiest way to find what we're talking about is just go into YouTube, type OVTLYR, and you're going to find my smiling face right there. and then you're going to find our channel. Either one is going to get you to these live streams. And we go over this every single day. And the greatest part about this is that we are entering into the US Investing Championship in 2026 with as many outliers as we can along with us. And we're going to overwhelm the US Investing Championship, just like I'd like them to overwhelm the chat right now by putting #outlier in the chat. So let's start at the top, right? We've got 4 main plans that we focus on every day in our trading room. And they go by plans M, A, ETF, and sit in cash, and don't F up your portfolio, right? That is the name that I am a firm believer on, because one of the easiest things that you can do is overtrade your account and F up your portfolio really, really good. So plans M and A are our most aggressive plans. And they're when the market is really working for you. When you've got the market that's bullish, you've got the sectors that are bullish, you've got the stock that's bullish, and everything is just working together in sync. But that's not where we're at today. Today, we're not there. Right now, we're sitting in plan ETF. And if we get an exit signal there, we're going to go to plan sit in cash and don't F up. What's great about this is we have a 360-degree, 365-day plan so that we are always taking advantage of what the opportunities are given to us. So let's start at the top. What in the wide world of sports is plan ETF? So over the summer, we hired a quant intern who had this idea. This was totally on his own. He came up with this idea. He listened to Vibha Jha, who was one of the U.S. investing champions in the last couple of years. Like I say, one of the things that we're going to do next year for 2026. And he came up with this plan and helped us develop one of the greatest plans that I've ever come across. And so plan ETF starts like this. First, you need an uptrend in the market. Now you can trade either the QQQs, the NASDAQ ETF, or you could trade the SPY, the S&P 500 ETF. So we're going to go through this together step by step, and I'm going to show you exactly how it's done. First, an uptrend in Qs and an uptrend in SPY. You can trade either one, either or, but let's go through and look at both of those two. So I've got the S&P pulled up here in Outlier, and you can see the green overlay right there is a bullish trend. We make it far too easy to see which direction the trend is. And right now, it is a bullish trend. Now, how do we designate a bullish trend? It's using the 10-period EMA, the 20-period EMA, and the 50-period EMA. That's it. Just those 3 trend lines, right? There's no gut feelings. There's no hoping and praying and profit targets. It is just math. So your 10-period EMA, that is your short-term moving average. Your 20-period EMA is your intermediate term moving average. And your 50-period EMA, that is your long-term moving average. Now, when you get your short-term, your long-term, and your intermediate term all together, all in sync, that's clearly the direction of the market. So we can confidently, with unequivocal back tests, show the 10 over 20 price over 50 is a bullish trend. Now, we make it green. So like I say, we make it far too easy for you. So that's the S&P. That's bullish. That's the Qs. That's bullish. Now, let me zoom out just a little bit and you'll see what it looks like elsewise. So when it is a bearish trend, we highlight it red. Or when it's a sideways trend, we highlight it white. It just really is that simple. So we've established we have a uptrend in both Qs and SPY right now. Next, we look to see if the SPY has a buy signal or the Qs have a buy signal. So in Outlier, I've got my favorites just to be the market indices, but you could add literally any stock you wanted over to the favorites right here. And I can see one click glance, buy. There's no more trust me bros, right? Like Mr. Mangine just put in the chat right there. There's no more trust me bros. Everything that we do at Outlier is data backed, science backed. So looking at this, we've got a buy signal here and a buy signal here. Now you're probably asking yourself, well, how do we generate these buy signals? What we do is we ingest a ton of data from price to news to investor sentiment. And what it does is it collaborates all that together to show you when investors are acting irrationally greedy or irrationally fearful and by how much. And that allows you to get into the stock before the outlier move happens. So we're still sitting on buy signals on both the Qs and the SPY right now. So if we go to the next step right here, we talked about the fear and greed. Let's go look at the fear and greed for both the Qs and the SPY.
And now, by the way, this is a unique indicator to us. As I said, we do have our own unique data that we have built over time with the help of our PhDs and the team here. So some of this data is not you are not going to find anywhere else. So just want to point it out.
Exactly. And it's really fun too when you see like the CNN Fear and Greed Index. I looked at it yesterday and it was in fearful at 40 and ours is up here greedy at 71, right? Seeing those divergences there was really interesting. But what we see right now is the market getting more and more greedy and it's peaking over 70. The SPY is at 71.79 and the QQQ is at 70.07. Now, one thing that we found, and this makes total sense if you think about it, is if we get over 70 on the market, trades get a lot harder to be profitable from the long side. Imagine, right? If everybody's greedy and everybody's already bought, how many more people are left to buy? Well, probably not that many. But how many people can turn from buyers to sellers very, very quickly? A lot of people. So anytime it peaks over, go ahead, Mahesh.
That's a high probability.
Exactly. Yeah. So anytime it gets over 70, that's where we want to be taking a more defensive play. And playing ETF that we're going through right now is our defensive play if it's not sitting in cash and not effing up our portfolio. And so looking at this, both of those two are over 70 on the fear and greed. So what that means is if you aren't already in plan ETF, the trade to make is plan sit in cash and don't F up. Now, what's great about this plan sit in cash and don't F up is you can buy shares of SGov. SGov is the ultra short term treasury bonds, the 0 to 3 month treasury bonds. And right now it's yielding about 4.3% per year. So basically you're earning money while doing nothing. And 4.3% APY is roughly half of what the market yields when you're just buying the SPY outright. So having no risk and getting nearly half the returns of the market, that's a great place to hold cash when you don't have a trade. Now, I'm in plan ETF right now. In fact, in our model portfolio, I'm up about $5,700 in this particular trade right here, right? Now, last week I went to Disney World and it was fantastic. Mahesh, I stayed at the most expensive resort in the most expensive room. I had a view right out my patio, which was right on the water, of the Cinderella Castle in the background. And it was amazing.
Wow.
You know what the best part about that was, Mahesh?
Yeah.
I made more money on plan ETF, not doing a damn thing, than it cost to have the most expensive room at the most expensive hotel at Disney World.
And this is something I tell everybody: the trading should not be stressful. Trading should be easy, but most of us, I mean, I have done that too in past, made trading stressful, made trading something where I have to check, hey, whether the candle is going up or down. I'm stressed out, losing money left and right. But this is like a great thing that we came up with, and you know, it's not just you, me. Like we have thousands of other members who swear by it. So.
Oh, yeah. And in fact, those of you who are watching live right now, put in the chat, share your experiences in the chat. I would love to hear from you, and hopefully we can highlight a handful of these comments as well. But plan ETF is one of the easiest plans that we've ever traded ever. And like I say, very profitable if you know what you're looking for in order to get into it. So let's talk about the next step here. Let's say that you got through this part so far. The Qs and the SPY are both under 70 on their fear and greed heat map. We want to find them in the value zone. Now, what is the value zone? So the value zone we defined as 2 ATR levels above the 20 period EMA. So let me show you what this looks like on a chart. So I only use a handful of indicators: the 10 over 20, price over 50, and then the ATR. Now, what is ATR? ATR, this goes way back. The turtle traders were doing this back in the 80s. One of my mentors, Larry Height, one of the original market wizards, I've worked with 5 market wizards, by the way. He was using this back in the 60s. Now, ATR, what it does is it calculates your average true range over, in this case, 14 periods by default. So how volatile is the stock? Not up, not down, but how much movement are we seeing within the stock? So 2 ATRs is actually super easy. You can add this onto any chart for free. Currently, it's 867. So if I look at the Qs and I say, okay, current price is 626.25, 626.25, and then I add 867, that's 1 ATR above, and then I do it again, that's 2 ATRs above. So if price is between the current price, 626.25, and 643.59, that's still within the value zone. Now, that can be a bit complicated, so we actually made an indicator. It's 100% free inside of OVTLYR, and it lights up green. It is the easiest thing to see. Are we in the value zone? Yes. Okay, sick. I can get on with that. So if the market works cooperating with the fear and greed, and then you see it within the value zone, you could continue on with the next step here. Any order blocks. We like to call them outlier blocks here at OVTLYR. Now, what is an outlier block, right? I want to show a couple examples. I want to go to Tesla to show what this is, because Tesla, Mahesh, you remember this was the end of last year. Tesla just had this huge 122% up move right here. It was like Tesla could not go down. Do you remember that?
Yeah, no, I definitely remember that.
Yeah, I mean, it was one of those times, like I like to say that all stocks are bad, and every once in a while they act right. Tesla was acting really good for a hot minute, and then it started acting bad again. What this shows you right here is what we call the market cycle. The market cycle is a stage 1 sideways trend, a stage 2 uptrend. Stage 3 is when the moving averages that we talked about start crossing back over, and stage 4 is the trip back down. Your job as a trader is to identify when it is in stage 2 and then buy the mess out of it. Buy the mess out of it in the meantime. But looking at Tesla, these investors, they had no choice. If they wanted to buy Tesla, they had no choice but to buy it right here. It was an impossibility to buy it at any other price. So they bought the mess out of it. They bought as much as they possibly could. But as price started to go down, those investors were riding down the wall of worry, the slope of hope, I should say. The wall of worry is on the way up, the slope of hope. And they have all these emotions going through their mind. I have a slide deck for this, by the way. And this is what we go over twice a day, every day on the OVTLYR channels. This is the market cycle, and it's really fun. Mahesh, when's the last time you went to the optometrist?
It's been a while, but
it's been too long is what you're saying. Okay, Mahesh, last time you were there, they probably did a little eye exam test. They're flipping through different lenses and stuff. Now, I go all the time because, not only do I have 40% of my hair, but I also have 4 eyes with my glasses. So looking at this, is it better 1 or 2? Let me scoot this over a little bit. Which is different? 1 or 2? 1 or 2? They're the same.
It's same.
It's the same, right?
Yeah.
So those investors that were full of belief, thrill, and euphoria, who had no choice to except pay this price up here, were stuck. And they watched as it went down with the complacency, denial, panic, capitulation, anger, disbelief, and depression. And finally, after an entire calendar year, Tesla came back to this level. And so what outlier blocks measure is how much overhead resistance or support a stock has. Now, you can get exactly your charts to set up exactly the same as mine over outlier.com. In the Discord, we have all the links for you right there.
Yeah, and one thing I want to mention that is that once people join, we are putting together all this training for all the new members to make it easier for them to, hey, this is how I should use, this is what should I set up. So that is kind of very important for us. So it's not just, hey, let's build a great platform, let's build great data. We realize that, including myself, everybody need some hand holding, some training. So we are definitely focusing a lot on that too. So it's not, we are not just leaving you out to do it by yourself.
That's right. And this is actually one of the lessons that we're going to talk about in OVTLYR University. Our Bravo class of OVTLYR University starts next week. Now, I mentioned earlier I was mentored by 5 of the market wizards, but I've been trading for 16 years. I've twice been awarded top 100 people in finance. I've made tons of money in the market, and I show exactly everything that I've ever learned in the market for free on YouTube and OVTLYR University. And other people charge tens of thousands of dollars to do exactly what we give away for free, because our goal is to make you successful in the market. That is our goal.
Yeah, and yeah, many people ask, hey, how much we charge for university is free. See, we have one annual pass you can think of. We provide all of these things. We don't charge anything for that because we believe that we are growing, because a lot of members are joining us. So it's not like, hey, we are not growing. We are growing very fast, and we have thousands of members joining us, and we are able to offer these courses without any additional cost, so that we can give back to our community, give back to our members, because we realize that people are tired of spending money here and there, throwing money. They don't know it's gonna work or not. So we're gonna work hard to provide something that works. And in the end, of course, we are charging. So that's not, but it's very nominal yearly pass.
It's 82 cents a day. Literally 82 cents a day gets you full access into the platform, full access into the Discord, full access into OVTLYR University, full access into all the indicators, full access into the buy and sell signals, literally everything. There are no upcharges. It is one price, 82 cents a day. So real quick, let me finish with Plan ETF. We hadn't got that far yet. We're running out of time. So the OVTLYR blocks right here. This measures these buyers right here. They're stuck, right? They are so pissed. They cannot wait to get out at break even. And it finally took, first, it took $1 billion of purchases by Elon to get to this point. And then it took nearly 30 candles churning through all those sell orders to finally push past this overhead resistance right here. Now, the reason I wanted to bring this up is we can look over on the queues and we can see a small order block developing, right? Now, let's say on Tesla, you've been holding it for a year. You're finally able to get out of break even. You're taking that sell. But if you're like 3 or 4 days, you're probably not even noticing. You're like, oh, okay, no big deal. So what we found was let me find the slide real quick, a limit of 30 days. 30 days. If it's at least 30 calendar days old, that's when we're going to pay attention to it. If it's not 30 days old, we can ignore it. Now, here's the exciting part about this, right? You can buy either QQQ and get no leverage, which is totally fine. Or you can apply this to TQQQ, or in this case, SPXL as well, either one. But you need to go when it's set up. Not today, because it's not set up today. You need to be able to have the access to the OVTLYR and see exactly what we're talking about in order to find this out. Now, you would buy shares of TQQQ to get the triple leverage. And that's what everybody in the chat is so excited about, right? There's like Stocky Locky. I'm reading the chat. I can't click the chat to show this, but the proof is in the data. I saw somebody said they had like an 11% gain in just a handful of days. There it is. Yokoshita says up 11% on TQQQ since mid-September, right? 11% in, let's call it, 6 weeks or so. That's not normal. What we do at OVTLYR is not normal. We are trying to make sure you are successful. And when you hear a financial advisor, like a friend of mine told me, his financial advisor said, get used to getting 6% annual returns. 6% annual returns? Are you kidding me? That is unbelievably pathetic. But yet that's what the financial advisors want you to be comfortable with. They will scare you into saying, I can't do any better than 6%. 6% is going to be all I could ever do. A lot of our outliers, they can pull 6% in a handful of days. For me personally, in May was one of the greatest trading periods I ever had. And it was 5 days long. Mahesh, I grew my account by over 30% in 5 calendar days. And in those 5 calendar days, I took as much money out of the market as I needed to pay off my wife's student loans. And then I bought myself a fancy Batman watch as well. That is the difference with OVTLYR. One of the chat says right here, I don't even get out of bed for 6%. We don't want you to be discouraged from being in the market. We want to give you everything you need to be successful in the market. Now, one thing you're going to need is where you get out, right? We talked about where to get in. Well, where do you get out? You need a sell signal from OVTLYR, or you look for the 10-20 bearish cross, right? The bearish cross on the moving averages that we talked about earlier. Looking for the 30-day order block to be hit, the same order block that we're talking about earlier. This one right here is only a handful of days old, so we're going to ignore it. And then lastly, if it gets to a point where it's 3 ATRs over the 20 EMA, not only is that out of the value zone, but that is in the big profit zone right up here. If it gets 3 ATRs above that point, that would also be a sell signal. And then, of course, if it pops back down, you could re-enter once it's back in the value zone.
And one thing I want to mention, these rules that you're sharing, these are not like, hey, my gut said, let's come up with these rules. Like, our team actually worked really hard to come up with these criteria. So not just, we worked with Scott on that and he was great. And in the back end also, like the same thing, right? With our team, we come up we backtest the data. We keep on testing so that we can trust our own data before we can offer it to our members. So that's the whole reason behind building OVTLYR, is that I can trust my own data and I can use my own data to trade, to invest. And if I'm comfortable, I'm happy to offer that to the other members of OVTLYR community, because then I can sleep okay.
Yeah,
So that's
absolutely.
the whole motivation behind it.
And one of the things that I've learned over 16 years of trading is you want to get to the point where trading is effortless. I like to say in my live streams all the time, when you walk into a bank and you get a CD and they're so stoked to tell you, Mahesh, we've got a brand new CD special, 17 months, 2.37% APY. All you got to do is sign right here. You sign, you walk out the door. 17 months later, you collect $2.37 on every $100 you invested, right? Trading should be that effortless, where you walk in, you take your trades, you come back a couple days later when you get your exit signal, and you walk back out and you treat it like an ATM, right?
Yeah.
There's no guarantees you're going to win every trade, but at the end of the day, with enough trades on, you should have a very high win rate. You should have a very high expectancy by following a rules-based plan. You don't have to follow our plans. You can follow any plan you want out there, but we want to give you the data to make your plans successful. And again, OVTLYR is literally 82 cents a day, everything included, all in.
Yep, I think that's pretty much it. Do you have anything else? We can answer some questions if there are questions. Otherwise, Lex can join if he's listening.
Yeah, I'd love to take questions.
You know what happens when Lex joins? That means Molly comes around in her white outfit now.
Hey, Molly, how are you?
Good, great job, guys. That was outstanding. I actually have 300 questions, except we only have time for a couple.
Okay.
That was awesome, by the way, guys. And
yeah, that was really good.
Great interaction from everyone. So what would you say, and again, I know you can't really give an exact number, but what would you say to, what does it take to be part of the OVTLYR community in terms of an account size? Can you do it with $300? And can you do it with, or do you have to have 10,000? You know, and I'm just making those two numbers up. But is it for small account people, or is it for larger account people, or does it not even matter?
It doesn't matter.
First, I'll go after you.
Yeah, it doesn't matter. I mean, so from the cost perspective, it's very simple. We charge close to $300, $323 to be exact, a year, right? Mm-hmm. If you are able to, think that, hey, if I'm paying $300 a year to this company, if I'm not gonna make, if that's too risky for you, then yeah, I mean, it's risky. But if you are like, hey, yeah, these guys built a great system, built a great data platform, etc., and I can benefit from it, and we have proof that people are benefiting from it, and if they're willing to spend that much, I mean, we have people who trades option, I mean, small account size. We have people with almost like I would say 7-8 figures account as well. So it's all about the good strategies, good data that you can trust. And we are not saying just, use our data. If you have additional data, use that. In the end, it's all about being successful. It's all about, making money. And if $300, if you are willing to, spend that much to gain more, then it's for you.
Got it.
I'm really glad that the chat was answering this question, because I saw at least 2 different people saying they started with 2,500. I saw one person saying he started with 900. Other people saying college students, totally starting with 0, right? Our goal, and that's why we do everything the way that we do it, is to make you successful in the market, right? We're not trying to sell you something that's tens of thousands of dollars. We're trying to give you a tool that is unbelievably inexpensive, and then give you all the training and the back testing and everything you're going to need to take what we give you and become a profitable trader. That at the end of the day is our goal.
80 cents a day.
Yeah.
That's amazing.
82 to be precise, yes.
Yeah, that's a really bad cup of coffee. That's a really bad cup of coffee.
I want to make a good cup of coffee instead of bad coffee. Yeah.
That's awesome. And how many trades do you have on at any one time, would you say, with the model that you guys are running? Is it hundreds of positions? Is it tens of positions? Is it 3 positions? What would you say? I know you can't exactly say, but ballpark.
Well, I think that's a really brilliant question. One of the mentors that I worked with was Mark Minervini, arguably one of the greatest traders ever. And when he and I were working together, he was like, listen, 10 to 12 is the very most that you could ever want at any time. And in plans M and A, we can get to that point. And it's all about position sizing, right? You want to make sure you take a small amount of risk, yet a big enough size where you can really make it worth your time. And so, like I say, 10 to 12 is great. I've had people send me a $3 million portfolio screenshot and he had 90 positions. And my first thought was, you have no idea what you're doing. That you cannot keep up with 90 positions. That is an impossibility. Right. So I would say max 10 to 12. Right now, the only trade I have on is full portfolio into plain ETF because it's working.
Okay. I love it. And then would you say then that, sorry, Mal, would you say that for a beginner, let's say, a very beginner, is it as easy as understanding the entry points and the exit points? And maybe there's a strategy appended to it of sorts that helps the beginner out. And they can really manage it as a beginner, or do you need to have a little bit more knowledge than that? How would you describe that?
So let me answer that, Chris. So it is for beginners. We are working hard to create training programs internally, including OVTLYR University, on how to use the platform. We are getting started with these onboarding training weekly calls for the beginners to understand our platform. But in the longer run, in early 2026, we're going to make it even easier for someone to get, like, we're going to build it out, simplify it, just like how we have simplified our data, which Chris was showing. Hey, it's just a green background. And when the green background is there, it's in uptrend, right? Before that, people had to, hey, let me see where the 10 EMAs, 20 EMAs, 50 EMAs, right? That needs some expertise. So we made it super simple for people to understand. And that's kind of our goal is, as we are building these strategies, so we are just getting started. As we are building these strategies, we're going to incorporate those. We're going to program them and make it super easy for beginners to see it. And they're like, okay, yeah, this is it. I can understand it because it's so easy. So that's kind of our goal is.
I love it. I love it. I think this is, tell me if I'm way off here, but this is my analogy I like to use with people when doing some education is there's a lot of complexity to options, or there can be, I should say, right? And you can get deep into models and second order Greeks and all that kind of fancy stuff. But at the end of the day, I want a stoplight, red, green, yellow. And I'm not saying those are your colors, but I don't care how the machine makes the yellows and greens happen. I just want to know what to do when they happen. So when the green light comes, I'm going to look both ways and hit the accelerator and go. I get that. That's easy. So it sounds like your platform kind of gives that sort of, ease of use. And I'm not saying it's color based, but I'm just saying that's the sort of simpleness that it has, and all the tricky stuff's behind the green curtain. And you don't have to understand that. You just have to know how to use it. Is that fair?
Exactly. That's definitely where we're at. In fact, there was a question in the chat talking about can you use options with OVTLYR? Absolutely. Yep. Options are my main go-to trading vehicle. Now in TQQQ, because that is a defensive strategy, we're not putting options on leverage already, right? Which just TQQQ as it is. But one of the things that I learned from Larry Hite, since I mentioned him earlier, was trading deep in the money calls, like 80 delta calls. And of course, you pay more in order to get that. But the extrinsic value, the part that actually decays over time, I look for about 20% or less on that, right? So we're not trying to have these out of the money YOLO calls. We're trying to make leveraged investments. And the way that Larry described it to me was it's like trading futures on every single stock. When you get the deep in the money calls, you can have that leverage without the decay associated with most people's option strategies. And it's already full of intrinsic value. And at the end of the day, when you buy an option, you're trying to maximize the intrinsic value. So that's one of the things that we talk about all the time.
Love it. Okay, so good.
We have some questions out there.
There's tons of them. I know Chris is watching them come through. They're scrolling through so fast. Yeah.
I do this twice a day, every day. I'm really good on the live stream, so I'll get there.
Hi, Maria.
How can they sign up? I saw that one too. So give them your website and what they have to do to sign up with you guys.
Yeah,
OVTLYR.com. OVTLYR.com. Sorry, Mahesh, you go ahead.
Yep.
It's just go to pricing page, and we have annual plan which is very discounted. They can just select the plan and just do the checkout. So it's as simple as that.
Perfect. All right, I put that in the chat as well. What a great presentation, guys. I can tell you guys do this a lot. That was fantastic. Yeah. I think you have a new customer. I'm going to sign up. Let's go. I'm going to give it a shot. How's that sound?
Great. I would love to have you and join our community as well. Get a feeling as well.
I'll be the snarky guy in the comments part, No, I won't be
lots of those. We got lots of. I have a button on the back end that will permaban anybody. So bring it.
I'm not going to get permabanned from you guys. I promise. All right, we got to roll, guys. Awesome presentation. Great product. We love it. Thanks for coming on.
Bravo.
We'll talk in the
Thanks
next
for having
week,
us.
Thank you so much. Fantastic. Way to go.
Fuel your portfolio and earn 2% cash bonus. Log in to Tradier Web. Select ACAP and choose whether you want a full or partial transfer. Select the firm you're transferring from. If it's not listed, choose Other Firm Not Listed. Choose your brokerage account type. Enter your account number and social security number. For partial transfers, specify the exact cash, stocks, or options you want to move. Once all details are complete, submit your request. Fuel your accounts and get rewards.
Would you look at that? The 2% commercial. Don't forget to do that. If you guys out there who don't have a Tradier account yet, go to Tradier.com, sign up, take advantage of the 2% cash back offer. It's a new promotion that we're doing. It was described in that commercial. If you have any questions, email me at hello@Tradier.com and we can answer those. But great presentation by the two guys. That was terrific. Great. I love the spelling of OVTLYR because it reminds me I should be wearing a really cool watch, like, Bulgari or something. Okay, Mal, we're up now. You and I, we have to do something here. Although Andy's going to do most of the work here.
Yeah, we're just standing aside. We're going to give you Andy, the guy who brings you the newsletter and all the content behind the strategies. He's got something lined up for you. It's going to be amazing.
Yeah, so we're going to do the Smart Options Trader segment. It's one of our newsletter that Andy writes and authors and does a lot of the trade generation on it. We're going to do, I think, 3 trades. Let's get Andy out here first, introduce him and meet Andy and let him tell us a little bit about his background. Let's do it. Andy.
How you doing? Nice
How
to
are
see
you
guys. I'm doing good. How are you guys doing?
We're doing great. We're doing great. Good to see you as always.
It's a sunny day here in Vegas. Hopefully the glare is not coming in through my shade too brutally here.
No, it's fine. It's all good. So let's get to it because we'll probably run a little bit behind, but we'll get through it. You gave us 3 trades, I believe. I have them queued up on Tradier Pro, which I can share if needed, and we can talk through these. But what I'd like to do is first, let's get a little background on Andy, just so folks know that you have a very storied background from trading energy, metals, commodities, all kinds of stuff like that, right? Tell us a little bit about yourself real quick.
I started trading commodities. Actually, I started as an over-the-counter options market maker at Philip Brothers, which was Solomon Brothers, in 1981. So I'm coming up on 45 years in this business, even though I look much younger. I worked at Solomon Brothers for 20 years, where I ran their entire non-energy commodities business, including their gold, silver, bullion business, which was a central bank business. Then I worked at HSBC and unwound an exotic options book there that was a nightmare. I worked at Cantor Fitzgerald as the head of commodity brokerage there. Left 6 months before 9/11. Unfortunately, lost a lot of people there. And I worked at a number of hedge funds. And since for the last 15 years or so, I've been writing. Semi-retired, but writing on my experiences in the markets and trying to share, some of the knowledge that I've gained over these kind of 4.5 decades. What I do is I use what I call a technimental approach. So I'm a kind of a fundamentalist economist. I look at supply and demand in commodities. I look at, a lot of the fundamental issues when it comes to the stock market or the bond market, foreign exchange markets. So I'm kind of take a macro view, but I use technicals for entry and exit points. And I do not discount the power of the trend. When fundamentals and technicals agree, I'm all in. But the most important thing that I've learned is that risk reward and discipline are the keys to success. Whether you're looking at commodities, you're looking at stocks, you're looking at foreign exchange, you're looking at cryptocurrencies, you have to have a plan for every trade, whether it's an options trade, an outright trade. You have to understand going in what your risk tolerance is, what your reward level is. It's always okay to adjust reward horizons, but risk horizons, small losses, big profits, that's always what, kind of my goal is. And it always has been. And, even the best traders in the world can be wrong half the time or more than half the time and still make money if they operate with the prudent and correct risk reward orientation.
Okay, fair enough. And I agree with every bit of that. So good. All right. So we got 3 trades, and
so before I go into that, can I just mention one thing that's critical for when approaching commodities, which is commodity cyclicality. And this goes to the fundamentals. And I think it's a core concept. Commodity prices tend to, first of all, markets tend to extend. They go way past what fundamentals and technicals can tell you on the upside and downside. But they tend to rise to levels during bull markets where production increases, inventories swell, consumers step back, prices find tops, and they reverse. And conversely, during bear markets, like we're seeing in sugar and certain things now, some of the grains, they tend to fall to levels where production becomes uneconomic, where inventories start to decline, consumers love things that are on sale, and prices find bottoms and reverse. I look for those types of opportunities, and that's a core concept whenever you're considering commodities. Sorry for the interruption.
No, that's terrific. I love it. What's best to do, Andy? I know you got 3 trades. I have a little slide deck kind of somewhat built. Do you want to refer to that for a couple of slides? And the reason I want to do that is you have reasoning for why you're making these trades, and I want to show that. Is that okay?
Yeah, that's fine. That's great.
Okay, let me see if I can share. Let's see if we can share a screen here.
Which one? Which are we starting with?
No, I got it. I think. Can we see? Can you see that?
I can see it.
All right. So I think it says bearish crude oil play SCO. Is that what it says?
Yes, it is. SCO is the leveraged WTI. That's the West Texas Intermediate Crude Oil Contract ETF that trades off the NYMEX crude oil futures. And what I'm seeing there in crude oil right now, which is trading, let me take a look, just around 59.50. So it's a little bit lower than it was yesterday when I put these trades together. Now, my reasoning is, look, the U.S. energy policy did a 180-degree turn last January. We went from supporting alternative and renewable energy to drill baby drill, frack baby frack, combat inflation through lower energy prices, blah, 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 all that stuff. OPEC Plus has been increasing their production because they want to maintain their importance in the market. All right. All of this tells me that fundamentally there's going to be more crude oil production. That's number one. Number two, seasonality. The most ubiquitous crude oil product is gasoline. Gasoline prices tend to reach seasonal lows during winter months when drivers put less clicks on their odometers. So seasonality does not favor crude oil in November, December, January, February, because drivers drive less. And the trend since the March 2022 high when Russia invaded Ukraine has been lower. We've dropped from $130 a barrel down to $55 a barrel on the NYMEX crude oil contract. We're currently trading at $60. So that bearish trend is intact, and the trend is your friend. So what I see here is that fundamentals and technicals are in line, and that gives rise to a trade. SCO is the bearish leverage 2 times crude oil ETF. And what I was suggesting there is a bull call spread on SCO. Now, remember, SCO is the negative crude oil ETF. So it's a little kind of counterintuitive. It's a bull call spread, but SCO goes up when crude oil prices go down. So I was looking at the $18.21 crude oil bull call spread for January 16th expiration. Yesterday it was trading around 75 cents for that spread. The maximum profit 2.25. So you got a 1 to 3 risk reward ratio. You're risking 1 to make 3. And I like this trade. I would roll the strikes up. If SCO's price reaches 21 before January 16th, we'll take profits on this. So that's what I'm seeing there. And
okay, and I'm going to switch back and forth between the platform and the PowerPoint.
Sure.
So I built this trade here. You can see it here. Green leg is the buy leg. Red leg is the sell leg. It's the 1821 January 16th of 26. That's the next coming January expiry. Is that right so far?
That's this January.
Yeah, this January, correct. So I think you said 75. It's actually $1.32 now in real time. But
right. Crude oil's gone down since yesterday. So I mean, I would work it at $1.75 around there, because nothing goes in a straight line.
Understood. But you're already making money on this one. So that's beautiful. And here's just a quick risk graph. We're not going to get too deep into this, but this is the shape of those bull call spreads, just like that. Limited upside, limited downside. You pay something for it. That's your max risk to the downside. The difference between the strikes and what you paid for it is your max profit to the upside. As Andy said, that's about a 1 to 3 ratio, right? Risk to reward. Which is beautiful. Yeah, I love that. I love that. Okay, that all makes sense.
Makes sense.
All right. Any other comments on that one? Otherwise, I'll try to get the next slide up here.
Well, the one other comment there is to keep an eye on WTI crude oil. 55.12 is critical support. And if we drop below there, there'll be a herd of technical sellers.
Okay, good point. Excellent. You want to move to BOIL?
Sure. BOIL. So that's the other. There's the other energy. That BOIL is the leveraged natural gas ETF product. And natural gas is exactly the opposite of crude oil, because we're coming into the peak demand season when it gets colder out, and a lot of heating demand, comes from electricity generated by natural gas. We are coming to the time where the injection into inventories in the US end and withdrawals begin. So seasonality is critical for natural gas, which tends to reach annual highs during the winter months. Now, there's something else going on here. Sanctions on Russia, Western Europe tends to get their natural gas supplies from Russia through the network of pipelines. But sanctions on Russia have, caused them to back off. So maybe they'll use more coal this year, but they will also import more LNG, that's liquefied natural gas, from the US. Now, LNG is pretty new, because natural gas in the US used to be limited to the US pipeline in the Americas, but now it can be liquefied and exported by ocean vessel, and the US is the #1 producer of natural gas in the world. So this is a huge export market that the administration wants to really ramp up here. So we've seen a recent trend of higher lows and higher highs in natural gas. And natural gas is probably, in the energy sector, maybe in all of commodities, the most explosive and implosive commodity, meaning the most volatile. And I always like to say that volatility is kind of the mother's milk of opportunity, because, gives you lots of trading opportunities. So technical resistance in natural gas is at about the 490 level. We're trading at around 425 per MMBTU for December delivery. And the BOIL ETF is leveraged bullish. There's also a leveraged bearish. It's called COLD, KOLD. But the trade that we're suggesting here is BOIL at around $33.50 a share. It's a bull call spread on BOIL. Bullish on natural gas. The 3640 call option expiring March 20th. So that gives us the entire winter season. And when I was looking at yesterday, the cost was about $1. Maximum profit $300, $3. That's $300 per spread. Maximum risk $100. Again, 1 to 3 risk reward. Roll up or take profits if BOIL reaches 41, and that's basically what I'm looking at over there.
Okay, let's have a quick peek on the platform. Typing in BOIL, we're gonna. And what was the strikes again? You know them off the top of your head?
3640. 3640.
Is that the Jan 16th one?
That is March 20th.
March. I got you. Okay, I'm almost there. I'm going fast. You can see how fast I can do this. 3640, right?
Yep.
And what was your price?
It was about $1 yesterday.
Yeah, so it's right around there. It's 98 cents. We'll call it $1 for argument.
Yeah.
Again, yep. I have that in the what if as well. It's right up here again. So it's a similar, similar looking graph for some of the beginners. Same spread, just different strikes. Is there? Do you have a good reason like you like to do the bull and bear spreads on these plays, or is it just kind of your go-to kind of play?
No, it's limited. I mean, in the energy, it's limited risk. It's a nice reward. It's a nice risk reward. Yep. And like I said, I can be right half the time and make good money doing these kinds of spreads.
I love it.
That's what I've done over the years. So,
and incidentally, it's one of my favorite spreads as well. So the bull or bear spread using calls and puts, I love those. All right, let's do the next one.
Let's go to the next one. Now, the next one is going to run contrary to the trend. All right, okay. This is a contrarian trade, but this one has to do with that concept I brought in the beginning, which is the cyclicality of commodities.
Yep.
Grains and oil seed markets have been in the dumpster. They've been terrible. The prices have gone straight down since 2022 when soybean and corn futures just came up to just under all-time highs. Wheat futures made all-time highs. So there's been a lot of negative stuff going on there. And we've just recently seen them bounce a little bit off the lows, but they're still very depressed prices. Now, in the agricultural space, there are the ABCD companies. These are the big agricultural worldwide producers. Archer Daniels Midland is the A, Bunge is the B, Cargill is the C, and Dreyfus is the D. These guys really are the big processors. They're the 800-pound gorillas here. Okay. Archer Daniels Midland and Bunge trade in the public markets on the stock exchange. Cargill and Dreyfus are privately held companies. Okay. So Archer Daniels Midland faced some real problems, some accounting problems, all kinds of stuff. The stock trashed, sitting around $60 a share. I think, and these stocks tend to move higher or lower with agricultural commodity prices. So ADM, Archer Daniels Midland, faced a lot of issues. Two big issues that really sank the stock, which were wheat grain prices and oil seed prices and the accounting issues. But they have been around for a long time. And what I've put together is a trade here that deals with commodity cyclicality. It's a longer term trade to June 18th, 2026, which is kind of the beginning of the 2026 crop year growing season, or end of the planting season. And with ADM around $60 a share, I like this 65-75 call spread for, let's see, what is that? June 18th expiration, which has like a better than 1-to-3 risk reward ratio at 2.25 with a maximum profit at 775. The strikes are 65-75. So I think that this is a nice contrarian play on a beaten down sector that really reflects the concept of commodity cyclicality.
Perfect. And you have a management plan there as well, right? Roll up or take profits?
I would roll up or take profits if ADM stock reaches $75 a share before June 18th. And personally, I would probably roll the strikes up, because if you look at a price chart of ADM stock, you'll see that there's a lot of upside in this stock, once they get their act together.
Right. Okay. Let's take a quick peek at this one. This was a longer term one. What was the strikes again, or the month?
It was June 18th expiration, 65 call, 75 call. Again, a bullish vertical bull call.
65. So we've widened this one out a little bit. We've gone, oops, I hit the wrong one. So I'm just going to slide that up, 75. And what was your price around?
2.25, 2.25 or lower.
Okay, yeah, it's a little lower now, which is good. So I like that.
Stock is lower today. So
it's like 4%, almost 5% lower today. So you got a little discount here on the play. That's great. Okay, again,
I like to leave. One of the things I wanted to mention in the daily Smart Options Trader that I put out. We put out one recently today with a Humana put spread. So we take the news of the day, and we take whatever is the most interesting story, and we translate it into an options play. And that comes out every single day, every business day, not Saturdays and Sundays.
Yeah, and you can sign up for the Smart Options Trader newsletter at hub.tradier.com. Don't forget to do that, because Andy's insights are in there. You said every day, I think. I think that's right.
Every business day, we're out there.
And I think there's always a suggested, a trade suggestion there. You don't have to do it. It's not financial advice, but it does exist there. And I've been looking at those myself lately, so that's all good. I appreciate it. Awesome, Andy. Well, thanks for coming on. We appreciate your insights into this sector of the market. I mean, it's just kind of I don't want to say new to people, but it's different from what a lot of our clients do, and we love the commodity space now. So that's great.
And you're so well informed. I just have a couple questions. Sure. What do you think's going on with China and soy exports, and how is it going to affect these companies?
Well, there's a big Supreme Court case about the tariffs that's going to determine that. And I think that we're going to see a lot of volatility depending upon what the Supreme Court says. But it seems that there was a temporary kind of reprieve with the problems between Xi and Trump. If China starts buying U.S. soybeans again, we've seen prices go from $10 to, I don't know, 11 and change now. So that could continue. Trump wants to bail out the U.S. farmers, and he wants soybeans going to China. So right now the trend is positive in soybeans, but the Supreme Court case is critical, Molly.
Okay. And, you mentioned tariffs. We see tariffs, spooking everyone. And so they're driving into something stable. So we see them jumping into treasuries, which is lowering the yields, which is probably going to allow us to refinance our debt, as well as we see these stable coins now using treasuries as reserves. We also see, which is, this is my main question for you, BRICS sort of, inching over, trying to, take the OPEC dollar over to non-USD. And how do you think that's going to affect everything that you've been talking about?
Well, the U.S. look, a weaker U.S. dollar, which is what we've seen since January, it
drives exports.
Right, tend to be bullish for commodity prices. I mean, and lower interest rates are also bullish for commodity prices because they lower the cost of carrying inventories. And I think that trend's going to continue. But I don't think it's just the U.S. dollar that's deteriorating. I think it's all fiat currencies. Just look at gold. I mean, my whole career running the gold business for Solomon Brothers, which was 20.
You mean this thing?
Yes. Gold traded between $300 and $400 an ounce. Silver was between $5 and $6 an ounce. Together with a group of traders at Solomon Brothers, we bought 250 million ounces of silver in 1995 as a proprietary position, and we sold it, for a profit. But and now it's 10 times higher. Gold is over 10 times, 15 times higher. That's a commentary on fiat money. And
right,
that trend continues.
Yeah, Bretton Woods is when we backed the dollar, when everyone backed themselves to the dollar, and then that got knocked up with Nixon in 71, and then the printing just began, and so I don't even think anyone knows, but October 31st we put in 29.4 billion in overnight repos. And so we do need to start looking at what is, while everything's going on, what is happening to the banking system, how are central bank digital coins having a play in the whole thing, and what's happening with Bitcoin and commodity and some of these stable coins.
One other thing, don't believe the published statistics on how much gold China owns. They own a hell of a lot more gold because China is the world's biggest producer of gold, and they've been vacuuming in their domestic production. So when the IMF puts out statistics and says China owns, 2,800, 3,000 tons, they own much more than that.
Yeah, we need an audit. All right, thanks, Andy.
Andy, thanks. Great job, man. Appreciate it. Don't forget to check Andy out in the Smart Options Trader, the newsletter. Sign up, hub.trader.com. Thanks, buddy. We'll talk to you later.
Take care, guys.
All right, Mark. Look at you. You're like a little smarty pants in commodities. I didn't realize that. Holy cow.
I thought you were going to comment on my outfit. I
already did that. You went from black to white. You're getting pure as the day goes on.
I know.
All right. Next up, we got to get rolling here. I see Trade Automation Toolbox on my agenda. This is Kyle Leisman and Eugene. I believe it's their partners or work together somehow. We're going to let them explain that. Terrific offering. These guys are fantastic. I had the pleasure of being with Kyle down on the SIBO and the SPX. We did a spot there together. Maybe we'll talk about that on the back end, but let's let them get going with their product and zero DTE trade signals. Let's get to it.
Hey guys, can you hear me?
Hello, hello. Hi, Eugene.
What's up? What's up? Yeah.
All right. Ready to go. So I am Kyle Eastman, founder of Trade Automation Toolbox, and with me is Eugene. He is head of community with us, and we're here today to tell you a little bit about our offering, what Trade Automation Toolbox does, how it's used, what kind of folks it's a good fit for, and that's kind of what we're here for. So I'll let Eugene pop up the presentation, and we'll get rolling.
Yeah, I got it up right here. Perfect. So what? So yeah, thanks for that intro, Kyle. So what is Trade Automation Toolbox, right? Think of it as best way to describe it is probably like a Formula One car for your zero DTE trading. So anybody who's trading SPX, SPY, Qs, zero DTE wise, meaning options that expire the same day. This is the tool that's going to help you navigate that space in a more accurate, more diligent way where things move fast. Obviously, markets regime can change like in a minute, and you probably do not want to do this manually, right? So in essence, we're a Windows-based tool that you actually download onto your computer, or if you're running a Mac, you're putting this on a virtual server, and you are predetermining, sort of creating a trading system for the day. Obviously, that could comprise of any number of strategies, but we're seeing, average traders probably putting together anywhere from 3 to 10 strategies per day that are encompassing different conditions that happen throughout the day, right? So anything from a VIX spike, anything from an EMA cross, anything from a SMA cross, all of these things are natively built into TAT to handle different sort of things that happen throughout the day and execute trades that are happening intraday, right? So you'll see on my right-hand side, I don't know how visible this is, but this is a quick visual of what the dashboard actually looks like. So
hit slideshow mode there, and then it'll get a little bigger, I think.
Yeah, okay. Is that better? Sorry, guys. I'm not sure much better, but yeah, there it is. But basically, you're looking at a schedule that runs on the right-hand side that's monitoring for things like conditions, webhooks, which we'll touch later in the presentation, but it's also monitoring timed entry trades, right? So some people find edge in specific time entries throughout the day, and it's just firing different trades away, and it's building your book, your intraday book, right here on the left-hand side. It's it's basically telling you how much premium you've sold, and then again what you stand to capture and so on, and looks at your win rates, looks at other like delta statistics. And then this bottom section here is essentially a condition. I mean, this is one of just a few that we've pre-built into here, but the system could monitor any sort of condition you've preset into templates or into a specific webhook that's going to say, hey, if we have a breakout to the upside and the VIX and the SPX is, let's say, up 20%, 0.20%, that'd be amazing. 0.2% intraday, then fire a specific trade. So it really gives you some pretty amazing customization as you sort of tranche or sort of add layers to your book throughout the day, right? And I covered what specific tickers we cover in detail. And go ahead, Kyle.
I was just going to say, so one of the key things, I guess, where it originated was, myself and some other traders who were trading zero DTE by hand, lots of mouse clicking, entering orders, adjusting prices once they get filled, placing stops, those sorts of things. And I really needed something to try to automate that. I wanted to run more entries during the day while I had a day job and have something, to be able to do the trading for me. basically monitor throughout the day, make sure stops were in place, make adjustments to stops as the pricing on your trades and things change. So those are all things that are built into the software, something that can be handled. It will cancel, replace orders, and do all of those things for you during the day to eliminate all of that screen time and the manual clicking, the potential errors from typing prices in, making adjustments all by hand. Those things can be done much quicker and more efficiently if you've got software doing it for you.
Yeah, and it's especially in a zero-DTE environment, not to say that TAG can't do anything beyond that, but specifically purpose-built originally for zero-DTE, you kind of need that sort of speed and agility as things do tend to move quite quickly in that environment.
Yep.
So this covers, I think, what the majority of people that do trade zero-DTE look to harvest, right? So we talked about that VRP edge, right? Volatility risk premium, normally we know that implied volatility is overstated against realized volatility, right? So
yep.
What we're trying to do is harvest that edge throughout the day. And on this right-hand side, you'll see kind of what we're seeing as the key components of trying to harvest that edge, right? So we talked about implied volatility being overstated. Obviously, theta working tremendously in our favor as net sellers of premium in a zero-DTE environment where time decay is just ripping through those option prices, right? So you don't even necessarily sometimes need to be right on direction, but theta can work magic for you, right? Return to mean, some people look for signals, right? So intraday returning to mean type of strategies. Skew strategies means, hey, they're seeing a skew, like put skew, obviously potentially overstated. Bias, so directional bias, pretty common, right? Breakout stuff, strategies. So everything is anchored in VRP, right? But hey, can I add more edge by finding some sort of directional bias through a tool like an EMA or like an embedded tool like an EMA cross, or something that you've sort of vibe coded yourself on TradingView that's giving you additional edge. And lastly, the automation bots. So putting all of this together, sort of doing all of your preliminary homework before you go into your trading day, puts you at mental ease, I think, right? So and again, there's some great discretionary traders out there, and I know some, I'm sure you've all heard of some. I'm not one of those people, right? The mental anguish of like, did I do this correctly, or is this I should have taken profit? This tool and this approach to trading, which again is not for everybody, but is for a lot of people, takes that mental sort of anxiety completely away, right? So you're just essentially trying to develop edge, understanding the anchoring of that edge is VRP, and then adding layers to try to make it as robust as possible, right? And we'll cover sort of what we see as best practices, what we see other people do shortly here, but we talk about edge development next, right? So you saw sort of where the edge comes from. Now, hey, are you good at reading charts? Do you think you have some sort of directional edge you could add and automate? Great, phenomenal. This is a quick screenshot of TradingView and a Donchian channel breakout strategy that we're actually just launched to our entire base. And those of you familiar with Donchian, it's a simple strategy, just looking back X amount of bars for price action, plotting the highs and lows, and looking for a breakout either above or below that timeline, right? So it's constantly moving with price action and sort of squeezing in. If there's a breakout above, the last hour of trading, that's a bullish signal potentially, and you're looking for, whatever, buying calls or selling puts.
Yeah, and again, there's the ability, so that's a TradingView indicator with alerts that you can trigger when you want those trade entries to happen. There's a way to set that trigger up to be received by the Trade Automation Toolbox software, where you've told it, okay, when I get this signal to go long, I want to enter I want to buy a long call, or I want to sell put vertical spread, and I want, it to be at this delta or this premium. I want to set this stop loss on it. And those things all you've set it up ahead of time. You don't have to think about it. You don't have to click on anything. The signal is received. The trade is placed. It gets filled. The stops get put in, profit targets, whatever you've configured, those things just happen automatically, get transmitted to your broker. And then you're in the trade, and TAD is monitoring it and, making changes if necessary. Those take profit out orders or stop orders will fill. as needed as a broker, but it's, it's hands off. You made the decision, you built out the strategy, days, weeks ahead of time, and there's no thought and no decision making that needs to happen real time.
Yeah, once that signal is live, the mathematics start to sort of take their toll, right? So you're trying to play the mathematical probability of expected value and edge that you've sort of done the homework on previously, right? And this just talks about that. We like sort of as a best practice, we see people exporting signals into a tester like Option Omega, for example, and testing out those signals, making sure there's validity to win rate, there's validity to edge. Because when something feels like edge, again, you see it on a screen, you're like, yeah, well, VIX just spiked, obviously a good time to do XYZ. And when you test it, the outcomes tend to be very different at times, right? So
yep.
I highly recommend testing everything you think has edge. And then seamless technology, Kyle just covered this, right? So so from a as long as that signal is fired in sort of either natively, a condition is natively met intact, so we talked about some pre-built conditions that we have out of the box, or something you've developed yourself in TradingView, once that fires, and again, this is all automatic, right? You've set the alerts automatically on TradingView. That data is now going to a webhook intact, executing the template you've created, meaning if X happens, then Y type of trade should be put, right? So we talked about like a breakout to the upside. Let's say it's a Dodge channel breakout. You want to sell puts at a 30 delta with a 1X stop. That's already preset for you. Once that signal fires, everything is done. The trade will automatically fire intact. The rules that you've set on that template are automatically in action, meaning, hey, do you want to move stops if you get to X amount of profit target, right? A lot of people do that. They try to kind of lock in profits early, right? Other people will look at, if something gets stopped, I want to give another shot at it. All of these different parameters, literally the world is your oyster in terms of the variations you could put together with these templates. But once that signal fires, everything else is done in an automatic fashion through TAC. I like this slide because this is probably one of the hardest things to do, especially when you get started with this tool. And we've been at this for years now.
Yeah.
Sitting on your hands is probably the hardest thing to do when you get into a mechanical type trading environment. And again, there's nothing wrong with doing things discretionary, maybe in another smaller account or, however you tend to trade. But if you want to go down the road of being truly sort of like a quasi-quant, you need to sit on your hands, right? That is letting the math play out is probably the most important thing you can do, because even if you do end up saving something by early closing something or by not entering a trade, you're just essentially messing with the expected value of the strategy or the ensemble strategies as a whole, and it's going to create bad habits. And this is something we try to steer people away from as much as possible. We've all been there, right, Kyle?
Yep. Oh yeah. Yeah. I've gotten to the point where I basically don't watch the market during the day. My strategy is mostly scheduled, not even so much with the technical indicators or the signals, but I run iron condors and then some trend-based trading based on which direction the market is going. But I've got 40 plus trades that go in every day and they fire, they get placed, and I don't watch what happens during the day. I log in usually 10, 15 minutes before the market closed, make sure, everything that I had in SPY gets closed prior to the market closing. But yeah, I don't watch it. I don't know which way things are going. I don't know if it's going to keep going that way, if things are going to reverse, and I don't need to know. I just know that over the course of, 250 trading days in the year, 40 or 50 trades a day, I've got 1,000 plus opportunities. And if I think my win rate should be 62 or 63%, and that will be enough to, make a nice return, that's what I'm looking for. So it's all about getting those trades placed, letting them run. There'll be good days, there'll be bad days, but over the long term, it should turn out, the way you expect, hopefully.
Yeah, exactly. Again, stemming back, as long as you've done the back testing, you've done the due diligence of understanding how slippage works, understanding how, entry slippage, like all of these how fees work, understanding all of these parameters and baking them into your formula, and you still have positive expectancy, you will extrapolate that edge with time. You just got to let TAT run its course. That's probably it, right? So Best practices, right? We've talked to thousands of traders. I think between Kyle and I, we're easily, 50, 60,000 trades in at this point, if not more. This is what we think makes the most sense. So obviously we talked about testing. Test before you think. You probably, some people are like, well, I have this gut feel, and it's like, I have it. You probably don't have it. I hate to say it. I don't want to sound rude. You probably don't have it.
No, you probably don't, Eugene.
Yeah.
I don't know. I definitely don't.
So definitely do the testing. Do your homework up front, and or micro size. Some people like to forward test with like a micro size.
Lots of one lots.
Yeah,
lots of one lot trades.
Exactly. Making sure that things match up well to your original thesis, that you're seeing the win rates you were expecting to see in the backtest and so on before you actually size to full scale. Keep things modular when you're creating. This applies really well to, I create a lot of custom scripts just based on my years of trading myself. I'm like, okay, I see this could have edge. So creating modular aspects that I could quickly iterate to see if I could add additional percentages to win rate. For example, one that we introduced to our group recently, the Donchian one, we have a cool down period between trades, right? So if you get a breakout, at minute X, you probably want to give it a little bit of time before you look for another breakout again, right? So keeping things modular, changing things as you test will help you really refine things a lot better. Automating risk first, and this kind of correlates to correlating signals as well, right? So it's very easy to create strategies that have high win rates or look for specific conditions, but are essentially doing the same thing, right? So finding correlation and lack of correlation is really an art and something you get better at as you sort of go down your automation journey. But finding strategies that, because if everything wins one day and you're like, yay, I'm phenomenal, but everything can lose one day, right? So it's like you're looking for balance. You're looking to create as much balance between long and short type strategies where your P&L curve looks, nice and smooth and doesn't have too many, values essentially. For 0DT in specific, time filtering is important. Not all minutes throughout the day act the same, right? So we know that the opening range has more volatility normally, especially in a gap type environment. We know, later in the day, power hour, gamma could really mess things up, right? So test things throughout the day as you layer in your strategies and see what works best throughout a specific time of day. And then the volatility regime, obviously, we've been through a couple. Kyle, I don't know if Kyle won the August 9 lottery, but you saw that 10% day, right? We've seen some crazy volatility spikes as of recent. Not all trades work in the same volatility regime, right? Obviously, if VIX is at 14, 15, they're going to act. Sorry, options are going to act not the same as if VIX was at 40, right?
Yeah, definitely.
So you definitely want to look at the premise of the strategy, but also test in different regimes, right? So looking at how well do your strategies perform depending on VIX. Okay, popular signals. World's your oyster. This is the key thing to understand. There's thousands upon thousands of strategies already in TradingView that you could take signals from, test, and see if they have edge. Make sure you're watching for repainting issues. This is something quite common. So a signal, I'm sure you guys are familiar, but I'll just cover it here just real quick. Repainting means a signal will fire and it will be a live signal, and then the next minute it will disappear because some parameter changed, right? So that's a false signal essentially, and that creates just a nonsense type of test that you can never actually take to market to strategy. The stuff we see ourselves trading and we're seeing a lot of traders find success with. Orb is one, so opening range break, looking at us X amount of minutes after the open and seeing, hey, is there a break to the up or downside? Similar, I described Donchian. It looks at a time frame, like a look back period, breaking up or to the downside, has definite edge, something we've introduced to the group and something we trade ourselves. And then this is an interesting one. So EMA, obviously, intraday is a common one. So looking at like, hey, are we seeing positive drift throughout the day? So let's say like 8 EMA is above 50 EMA, and it's just continuously up. So you're just kind of tranching puts along as we drift up. But adding a layer of daily SMA on top of that, people are finding tremendous success in strengthening that signal with that SMA overlay. And that's something we've just, that's something that's natively available on TAD that you could play with and automate for yourself. Same thing for trend percentage, meaning, hey, after market open, something I like to trade myself, after market open, are we seeing a trend up X amount of percent? Like if the trend continues up and we're above the open, I'm pretty bullish on that sentiment, and I'm going to continue sort of firing, either selling puts or buying calls or butterflies, whatever I decide to. However I decide to approach that signal, it's up to me. It seems to be like a high win percentage signal. And then VIX, right? So VIX spikes or VIX compression, popular one. A lot of people trade it independently. Some people mix it up with other signals. So you could bake groups of signals to kind of, you don't want to overfit, you don't want to overcurve fit things like, these stars need to align for you to take a trade. That's also not good because your sample size, your p-value is going to not be that great, but definitely something to consider as maybe a preliminary filter on maybe a gap or something like that.
Yeah, like you said, when VIX is 15 versus when VIX is 30 or 40, things are way different. So definitely there will be trades where you want to build in a conditional check on VIX or on like you said, gaps, other any of these other things can be layered on top of each other, one on the other. If they you want to see an overnight gap up, you also want to see VIX down 0.5% from yesterday. Those things can be can all be combined to build out something that you think has edge. And again, looking back at back tests and looking at tens, hundreds, even 1,000+ trades going back 3-4 years, and SPX for daily expirations is something that will give you a lot of confidence in how a trade long term hopefully will perform.
Yeah, no, this is, I'm going to give I think it's a decent analogy here. So I said this is the Formula One of residual trading, right? That Formula One teams obviously use different tires, different potentially fuel, different balances based on the track, right? I'm pretty sure I'm not a Formula One expert, and I'm pretty sure that premise stands. So look at that similarly as you enter the market daily, right? VIX levels, gaps, all these things create a slightly different course you need to take your car around, right? Use that to sort of extrapolate further edge as market presents its kind of daily data to you. Okay. Oh, sorry about that. So, my thing is jumping here. Okay. So who is this meant for? It's meant for everybody, really, but you do have to have some understanding of options. And we do have a pretty solid YouTube channel that has kind of a crash course on everything automation, specifically using TAT. Highly encourage you to kind of go through it. It's right here. Just YouTube Trade Automation Toolbox in YouTube, and you'll stumble upon the multitude of videos we've already put out on how to use all of these components, right? But what we found over sort of the course of time is there are two types of traders that seem to stick around the longest and do the best. One individual is what we call a dual timer. This is an individual like Kyle was previously, or we see a lot of people that have a job, essentially a 9-to-5 job, love options, love the ability to model, understand, how to extrapolate edge. And they're working full time and they're letting sort of TAT run in the background and do its thing. Or we have what we call the pro tail trader. Now, this is not a term we coined, but we heard a fellow TAT trader who actually runs a hedge fund off of TAT mentioned this term to me. And he's like, hey, there's a lot of guys in the TAT group, which we have our own Discord, obviously, where we share ideas and sort of work together. There's a lot of guys that are running pro-level data or like pro-level analysis, correlation matrixing, like doing things that a professional prop firm would do, or like a sort of a professional desk would do, but doing it independently, either with their own money or some family money. And those guys tend to do extremely well. with Pat and have years and years of like market beating returns with better MAR ratios and so on. And I'll jump. This is the team. You've seen us. I'll leave it for some Q&As. Kyle, chime in if you have anything else. And
well, let's jump in here. I don't know if we've got any time left, but yeah, that's, I guess the main thing I'll say is, yeah, the TAT is is the software tool to use to implement the trading and strategies that you're already doing, things you're doing manually, and it's huge time saver and potentially adds a tool to your tool belt to allow you to run trades while you're doing other things out and about, like you're at your job, you're running errands around town, you're on a live stream like this. I've had a couple trades open while we've been sitting here, and we'll check in, like I said, at the end of the day and see how things went.
And the mental piece, right? We talked about the mental piece, right? A lot of people struggle with the anxiety of like, hey, was this the right trade to take, or was this like, hey, I should have taken a stop loss, or I could have let the profit run. No, just listen. You've done the math. Let it play out.
That's great. Thanks, guys. That was awesome. Do you guys find that I love TAT. I just feel so cool when I say that instead of Trade Automation Toolbox. I feel like I'm part of the gang. So is it valuable to trade beyond 0 DTE with your product, do you think? And what sort of structures can it handle beyond 0 DTE?
Yeah, so like we said, 0 DTE is where it started, and that was the initial need. But we've branched out beyond that. You're able to trade really any DTE that you want, but really probably 30 days or less is probably the sweet spot. People who are trading frequently, the 0 DTE stuff, or selling short-term calendars, things where you're entering a lot of trades, and it makes sense to have a tool that's gonna, will do this for you, will manage the entries and everything. If you're only, if you're selling a covered call once a month, then, you probably don't need software to do that for you. But if you're doing lots of trades regularly with, a strict set of rules, then we think it would be a huge benefit.
But I would say this blonde needs software to do a covered call.
Well,
that's probably true. Just kidding. So how long have you guys been around? I mean, I should know the answer to this, but I don't think I do.
Yeah, so I originally started, I was trading back in 2021, 2022, 0 DTE, manually was entering one trade in the morning, basically before work, and ended up thinking that I want to do more than this. So it was summer of 2022 that I wrote the initial version of it for myself and some friends that traded similarly, and then the word grew pretty quickly and ended up turning it into kind of a side business, and now a full-fledged business in the fall of 2022. So we're well over 3 years in now, and a lot of those original, OG users are still here, and have done real well over those three plus years now.
Very good. And so what's next on the next for you guys and at TAT?
I don't know.
You need to give me a hat with TAT on it. I'll wear it all the time, man.
Yeah.
All right. We've got next time I see you, I'll make it up to Chicago. I'll bring you one. You seem to be the hat guy. But,
I'm the hat guy.
I mean, we're always, taking, basically it's been user driven for 3 years now. The features, trade types, structures that our users are asking for have continually gotten added. We're doing a lot of things now that we weren't 2-3 years ago. So there are more trade types, potentially more underlyings in the future. And we're continue to take that feedback and to do everything we can to grow and to add more features to make it a more valuable tool for our user base.
And it's a perfect time since you started. We've seen a 5x growth on 0 DTEs, and I think it's half the options volume on SPX. Is that correct?
It is.
Wow.
Yeah, we're a small part, but definitely have, we've spent plenty of our money, in SIBO fees over the years.
Right. That's a whole other show in itself.
Yeah.
That's right. Awesome.
Right, that's Lex's fault since his family started SIBO. So
right. That's blame it on me.
That's his fault.
Kyle got to be down in the middle of it. Eugene, you got to come visit with Kyle next time, and we'll do another show down in the SPX.
Yeah, absolutely. I've never been actually to the pit, but yeah, definitely. I'm out west, but definitely, maybe not in the winter time, maybe closer to summer.
Yeah, we'll do a little more summer thing. That'd be great.
We'll head out there.
All right. How do they get a hold of you? Give us the plug. TradeAutomationToolbox.com or something else.
Yep, that is it.
Okay.
Where you
Good.
find us. So we'll
All
get
right,
you every time. We'll get you behind that Formula One car. Take it for a test drive. Let us know how it goes.
All right.
Awesome. I love it. Guys, thanks for coming on. We appreciate it. I love the
Yeah,
product.
thank you
You're
very
doing
much.
great work.
Thanks, you guys.
Thanks,
Bye.
guys.
Every trader has a style, a rhythm, a strategy. But behind every smart move is the right tool. Tradier Mobile puts the power of multi-leg options trading in your pocket. Clean, fast, and built for traders on the move. Need more screen space for strategy? Tradier Web is where clarity meets control. Visualize your trades, adjust legs, track the Greeks, all without getting lost in complexity. You don't just trade options, you engineer them. Tradier Pro is built for the relentless, pro-grade execution and tools that keep up with your mind. Choose the platform that fits your trading style.
I get so happy with commercials. I don't know. Especially our commercials. That was really cool.
I think that's the first time I've ever heard that sentence in my life.
What?
No one likes commercials, but these are good.
Oh,
I will say though, I'm really
commercials.
enjoying these. Bravo to the Tradier team.
Yeah.
Done.
All right. So we have a few more, but we have a little break now. So from 3 to 3:15. Well, I guess from 3:07 to 3:15. But I think the folks have a little QR code for everyone. Now, here's another quiz. Let me just explain it first before we show it. Here's what this is. So yours truly, that would be me, is actually in the process of writing a book.
You heard it here first, folks.
Yeah. So what? And just in broad strokes, okay. What the book is sort of about is it's called it's not necessarily called this, but it's the concept, the personality of the trader. Okay. Let me explain real quick. I know we got a couple minutes here. I started in the industry and I was a floor trader 100 years ago. I think Henry said he thought I was in the 90s. I was actually in the 80s when I started. So I was a little even before Henry. But anyway, what I discovered very quickly is that I failed miserably at first. That's number one. Okay. I lost my backer's money in 6 months, and that was $50,000.
Okay.
He somehow saw something in me that he believed in, and he ponied up another 50 grand. Which means that that was going to be the last amount. So anyway, I made something work, but I changed the strategy that I was taught. And the strategy I was taught was premium buying. Nothing against premium buying. I just discovered it didn't fit my personality of how the dynamics of buying premium worked out. So what I ultimately figured out was that I like premium selling better, and I figured out that I needed to do it safely and figured that whole mechanism out. So anyway, the bottom line is this book will take you through all these archetypes of what the edge engine is, how you make a trade, the premium stance, so you're going to be long or short the premium, and what your time frame is, your cadence is what I call it. Okay. So it's going to go through that mechanism. And one of our producers and people at the hub put together a quiz to kind of give you an idea of what kind of trader you might consider. And I don't know, guys, I'm sorry, it's on the screen. I see the QR code. So you know how to do it now. You can just take that quiz on your own. If you want, send us an email at hello@tradier.com with your results. And you never know, you get a free book in the mail one day. So stay tuned for that. And we'll see that in production down the road here.
And where are we going to be able to find that? Where are we looking for that when it comes out?
When it comes out, we're going to put it on the hub page, one of the new hub pages, and it's probably going to be downloadable for hub members.
Okay.
And it's also going to be available in probably paperback if you want to buy it, probably on Amazon as well. Okay. So we're working through all that. And I realized that I'm not a writer. Well, I am a writer. I was an English major, but you're the writer, Mal. So you're
the English major. But what's really neat is that you not only have the retail trading side, but you are a market maker. So you know these tertiary effects on the markets, and then you see, and plus your family started SIBO, so you have all these angles, and you've been on the brokerage side, so you really do have every section of trading as a whole, the type of trader you are and the environment that you're in. So I'm really looking forward to this book, and I knew it was coming, but
I know you're going to help.
Yeah.
Right?
Yes, you'll flip backwards. You know, it'll just say trading for blondes. It'll just be that way. Yeah, it'll be in the back page.
Oh my God, no, that's fun.
3 pages.
Yeah. So Molly, where are you in the trading kind of ecosystem? How would you describe your?
I am I love to feel a company. So I'm a lot of girls, a lot of women are like this, where we're fundamental value traders, where, you know, I like to feel the fabric and, you know, do the experience and taste it and you just experience the company and the fundamentals of it. So if something is, you know, if buying the dip is usually the way women go, especially Kathy Woods, we take hits on the front end, but we really back products. So, and service that we love. So I really am that. And I would say I love options because of the insurance and the puts you can throw on there. And it just, I don't have, like, we have cortisol pumping through our bones. So I think I'm more that kind of trader. And I think that's where we become a really good team. And that's where we'll be able to share infos. And I think that's growing. I think a lot of people are getting into that more as well, because Green was come on today, but he's talking about the shortfalls of long-term investing. And because sometimes the fear of just investing in stocks that we know they're going to go up skews the actual price. And then we talked to Cameron Dawson came on about, you know, EPS bubbles and I think there needs to be a huge shift. And plus you have all these bots kind of skewing what's happening. I think there's going to be a huge shift back to fundamentals and back to the analog form of it. And
yeah, no, I agree with that. That's well put. You know, you have such depth of knowledge in this space. I mean, are you making this up? It's amazing.
I paid him to say that. Thank you, like, right on cue.
Oh my God. Reminds me of something, by the way. So you mentioned about, you know, AI automation. We've heard a lot of that today. I just want to also just reiterate to the viewers. Tradier has, I would say, the best APIs in the business. Okay,
hands down. By the way, hands down.
Right, and you've used them for your product. I use them for my product. I tried elsewhere, and I got to tell you, if you're in the game of creating some sort of piece of software, or just for yourself, if you're an individual and you know you can code, or even if you don't know how to code, you can use this stuff. You can create such great automated workflows using our APIs. I know I'm biased, but I got to tell you, I wasn't biased a while back, and they're truly tremendous. And I also like to give the commercial that the world isn't going any further away from automation and kind of automated workflows. It's only getting near with AI and all that other kind of stuff. Yeah. So make sure you try it out. You can open an account with us. Don't have to fund it. You have access to the APIs with your regular account. And if you are on the commercial side, you want to grow a business like Tat does, or any of these other folks do, are connected to us, send an email to sales@tradier.com.
And I just have to.
The team will take care of you. Sorry.
Yeah, I just have to tell a story about that, where the team is also amazing on that. Like the actual people behind Tradier are really incredible. And when we were just starting out Trade Cheetah years ago, we get a call. We were in the breakfast room from Dan Raju, and he's like, "Hey, I heard you're building something." So they really care. And so if you're stepping out into the world and you're trying to build something, this is the place you want to go. And the team there is there to support you, and they're incredible. So give them a call.
Thank you, Mo. All right, good. Let's get ready for our next guest and speaker. His name is Nishant Punt, and I think I got that right, even though this is that way, because he made me say it 100 times when we did a show together. Stay tuned for our show. It'll probably be on the Tradier Hub and on the Tradier Hub YouTube coming up in the next few weeks. But let's welcome Nishant Punt to the stage, and he's going to give us a presentation on mean reversion trading. Thank you.
Hi, everyone. Thank you so much for being here today. And a big thanks to Tradier for giving me this opportunity to present my algorithmic trading system called Maya. When I had my first call with Brian, I remember he mentioned that the way Tradier likes to grow is by helping others grow via partnerships and education. And it has been almost 2 years since then, and that is exactly what my experience has been working with them. So thank you, Tradier, and all the amazing folks out there. I hope you can see my presentation, right, on the right side. Okay, I'm assuming you can. So I'm just going to go through it. Okay, so over the next 20 minutes, I'm going to share something with you that completely transformed how I approach options trading. And it's already helped over 6,000 options traders eliminate the biggest enemy in trading, yourself. My name is Nishant, and I'm the author of multiple books on options trading, founder of Trade with Maya, and I've been a CNBC contributor for the past 3 years. You see these numbers here, right? So let me just make sure everybody can hear me, and then I'll go ahead with these numbers. Okay. So you see these numbers here on this slide. These are not theoretical. These are results from a trading system called Maya. This strategy has been back tested over 10 years in all types of market conditions, bull market, bear market, sideways chop. The back tests show a 64% average win rate with over $500,000 in net profit in 6 years, starting from a $30,000 account. Now, Maya went live in April of this year with real money. And since April, it has returned 31% ROI, while the S&P 500, which is its performance benchmark, is sitting at just around 14%. But before I tell you what Maya is, I need to tell you why it even exists. Because the trading industry has a dirty little secret and nobody wants to talk about that. Okay. So I know, all of us have seen these stats. These are floating around the internet, and honestly, I'm a little sick of seeing it myself. 90%, 9 out of 10 traders blow up their accounts in their first year. Let me ask you something. How many of you have held on to a losing trade way too long? Just hoping, praying it would turn around. Maybe moved your stop loss just one last time? Well, you're not alone. I used to do the same thing. I remember one trade. I was down like $3,000, and instead of cutting it at my $500 stop loss, I convinced myself it would bounce back. I'm sure you know what happened next. That $3,000 loss went to 10,000, and that was a very painful lesson. But here is what I want you to understand. This statistic isn't meant to scare you. It's meant to wake you up, because most traders think they fail because they're not smart enough, or they don't have the right strategy, or they need more indicators. But that's not the problem at all. So what is the problem? Why do 90% traders fail? Okay, so I have mentored around 6,000 options traders in the last 5 years. And I have pretty much narrowed it down to the following 3 problems. So problem number 1 is, you may know this, trading on emotion. Fear keeps you out of winning trades. You see a setup, but you are scared because the last trade lost money. Greed, on the other hand, keeps you in losing trades. It's got to bounce back. I'll hold a few more days, all that stuff. And then number 2 is no clear strategy. So honestly, most traders, and I would say specifically options traders, are just winging it. They enter trades based on a feeling, or because they heard about this new fancy strategy, whether it's zero DTE, iron condors, broken wing butterfly, jade lizard. These are all real strategies. And the problem is not with the strategy itself. The problem is that there is no consistency, no risk management, no trading plan. And number 3 is lack of trade management. So this one is a real killer. Whether it comes from lack of time to monitor your positions or lack of discipline to follow your rules, poor trade management destroys accounts. From my own mentorship experience, I found that poor trade management stems from 2 things: riding a trade to full loss in the hope that it will come back to life, And the second one is an honest one. You may be a busy professional who doesn't have time to stay glued to the computer, and you miss your exit points entirely. So trade management isn't just about having a plan, it's about having the time and discipline to execute the plan. Okay, and the final one is information overload. We are living in the information age. There is so much noise out there, hundreds of indicators, RSI, MACD, stochastic, Bollinger Bands. I mean, the list just goes on and on. So you've got so many indicators that you can make a decision. And when you finally do make a decision, you second guess yourself. One indicator said yes, the other one said no. So you know how it goes. So is there a solution to this? And actually there is. The solution is eliminate the human. What I mean is remove human emotion from your trading decisions. Because here is what I discovered. The best trader is the one who follows their rules. No deviation, no just this one time exception. Just follow your rules 100% of the time. So I built my algorithmic trading platform Maya with these 3 core principles. Number 1 is rules-based. Every single decision is predefined. Entry criteria, exit criteria, risk amount. There is no opinion, just rules. Number 2 is emotionless. The system doesn't feel fear when the market drops. It doesn't feel greed when a trade is up 50%. It doesn't hesitate. It just executes based on the rules. And then the third one is consistency. So same strategy every single time, same risk reward ratio, same analysis framework. And when you remove the variables from trading, you start getting predictable outcomes, which you can then measure. So let me introduce you to Maya. What is Maya? Maya is a 100% rules-based options trading system. Every decision, when to enter, which strikes to choose, when to take profit, when to cut a loss, is predetermined. No guessing, no gut feelings. Now, Maya trades one strategy and one strategy only: bull call spreads. These are also called vertical debit spreads, not to be confused with credit spreads, which are very popular. It's the simplest trading structure out there in the options world. Let me explain this simply because I know options can sound complicated at times. Let's say you think a stock is going up. Instead of just buying a call option, you buy a call and sell another call at a higher price. This creates your spread, quote unquote spread. Why do this? Well, there are many reasons, but here are the top 3. So number 1 reason is it shields you from options Greeks like time decay and implied volatility. And if you have traded naked options, you must know how these Greeks can destroy your account if you don't understand how they work. With spreads, you don't have to worry about the Greeks, as the long option and short option that you hold kind of cancel out all the Greeks. The number 2 is it defines your maximum risk upfront. You can never lose more than what you paid on any single trade. Although Maya never lets a loser go beyond even a 50% loss, but I'll come to that in a second. And then third core principle is it defines your maximum reward. So you are targeting to double your money, 100% return on every winning trade. You can never make more than 100% on your trade, which actually makes it very easy for you to decide when to get out of a trade, because holding longer doesn't mean making more money. Okay, so do you see this table on the side? I know I can't hear you, but I'm just assuming that you can see that. So this table on the side, I've made some assumptions. A starting account value of $10,000, which grew this account to $40,000 in 9 trading cycles. Here's the beautiful part about this math. Even if I only win 50% of the time, just a coin flip, I'm still profitable because my winners are twice the size of my losers. In this example, around 9 trade cycles, each cycle lasting 30 days, has the potential of growing your account from 10K to 40K. Now that's a massive return for a system which relies on flipping coins. But don't worry, Maya doesn't flip coins. Neither is its win rate 50%. It wins around 65 to 75% of the time, based on backtests and real life trading. Now you're probably wondering, how does Maya even find its trades? What is the secret sauce? So this is where Maya's real edge comes from. It's a two-stage top-down process. So stage one is market health check. So Maya doesn't force trades. This is critical. If the market conditions are not right, Maya sits on its hands and waits. First, it checks the trend for QQQ. QQQ, as you may know, is the NASDAQ 100 ETF, basically a proxy for the overall tech market. If the Qs are in a clear uptrend, it's a green light. If it's choppy or downtrending, Maya goes into preservation mode. Next, it checks the VIX, the fear index. If fear is too high, if volatility is spiking, Maya knows this isn't the time to be aggressive. It scales back. And finally, it checks market breadth indicators like McClellan oscillator, advanced decline line. These tell us, is this a healthy market where most stocks are participating? Or is it just a few stocks holding up the fort? So only when all of these align does Maya move to stage two. Now, stage two is your trade entry. Maya looks for the perfect trade setup using multiple technical indicators. RSI tells us if a stock is oversold, meaning it got beaten down too much and is due for a bounce. MACD confirms the trend is turning bullish. Bollinger Bands show us volatility expansion, which means the stock is beginning to make that move. And finally, volume confirms that real money is flowing in. When all of these conditions line up, and I mean all of them, that's when Maya sends you an alert. So you get a text message and an email that says, Maya just entered XYZ trade. Buy the 100 call, sell the 105 call for a debit of $2.50 or $250. As you may know, with options, you have a 100x multiplier. You have all the information you need to place a trade. You can choose to use Maya's alerts to open trades from its 35 stock watch list, or you can use the trade scanner built into the website, which uses a more expansive list of around 200 stocks. Irrespective of how you open a trade, as soon as you log the trade into the system, Maya starts babysitting your trade for you. It wakes up every hour, monitoring your trades, and will notify you exactly when it's time to exit, whether it's time to book profits or cut your losses. Okay, so now it's time for some social proof. We have hundreds of traders using Maya, and I asked a couple of users to send me their performance screenshots for this year. Do note that Maya went live in April, so this performance is not even one full year. The first trader shown here, his name is Tom. He's an advanced trader with a big account. His trades are big and so are his profits. So 28K in 2 months as shown here. I know looking at big profits makes everybody excited, but to level the playing field, I like to talk in percentage terms. The second trader shown in the next slide, which is right here, he is up 46% since June, as shown in this performance chart, which automatically shows up on the website as you keep entering your trades. In his case, note that S&P 500, which is our performance benchmark, has gone up only 12.6% since he joined. So although his account is small in his size, his percentage results are really impressive. I mean, he's even beating Maya big time. So that is what rules, discipline, and structure can do for your trading. Okay, so if this is something that interests you as an options trader, head over to tradewithmaya.com. We have two pricing plans. The Pro plan is the all-inclusive plan, which comes with full access to the trade scanner, SMS alerts, and priority support for trade-related questions. I answer all these questions myself. It also comes with tools built into the website which will make you a better trader. For example, Maya's engine will be able to point out trading mistakes to you, like if you're holding on to a trade longer than you should, or your risk is unevenly spread, or if there is an earnings or dividends event coming up. The standard plan, on the other hand, does give you unlimited trade alerts, but it doesn't come with priority support, SMS, or trade scanner, although all these are available as add-ons. Okay, so for all of you attending this conference, I have worked out this offer for you. You get a 10-day trial for $9.99. That is 10 full days to test drive Maya, see the alerts, watch how it works, paper trade if you want, whatever you need to build confidence. After the trial, you get a 50% discount for the first month. That should give you enough time to see if Maya is something that can help your trading. So if you've been struggling with emotional trading, if you are tired of second guessing yourself, if you want a system that removes the psychology and just follows the math, then try it for 10 days, $9.99, less than $1 a day. If you hate it, no hard feelings. If it works for you, and I think it will, you will have a system you can use for years. Okay, so I've got, that's my presentation. I've got 5 minutes left. So let me hand it over to Lex in case he has any questions for me. Lex, you there?
Where am I? There I am. How are you?
Pretty good. How are you?
Great job, Nishant. I love it. I love it.
Thank you.
Yeah. So I always like to ask this question of you folks. Again, account size. Can $1,000 account handle this? Are there any kind of specifics around that make this better than not?
Okay. So yeah, that's a good question, and I get asked that question a lot. So Maya trades, it trades bull call spreads, as I mentioned earlier.
Yep.
And it trades two kinds of trades: $1 wide spread and $5 wide spread. And which means you can trade with as little as $50 per trade or $250 per trade. It's up to you, whichever you want to choose. You don't need a huge account. Start small, build confidence, scale up. A $1,000 account, like you asked, can easily be used with Maya because you're taking only $50 trades.
Sure.
And each trade doubles your money. So although we have traders who have accounts in the millions too on our website, the strategy works irrespective of account size. The only thing to keep in mind is that you need to keep your risk even across all trades. So this should be obvious to you that you shouldn't take your first 5 trades risking only $50 per trade and they all become winners. And then suddenly you take your 6th trade, which is a $250 trade, and that one becomes a loser and wipes out the last 5. So that keeping risk even across trades is very important. And in fact, the website Maya will actually spot this. If you start doing that, it will point out that you are making a trading mistake, and it will tell you exactly what's happening. Like your risk is uneven across your trades. So yeah, but you can trade with a $1,000 account.
I love it. And what would you say? How many positions do you have on at any one time? Would you say, is it always just one, or is it several?
Oh, it's several. Yeah. So Maya can take Maya can take between, I would say, could take 5 to 15 trades per week.
Okay.
And if it finds that the market condition is not right, it becomes conservative and it could drop it down to 1 or 2 trades. And sometimes it just sits on its hands and just does nothing. And what happens is Maya will send you a daily morning announcement telling you what it is, quote unquote, thinking about the markets, how it's assessing the markets, and what its trading plan for that day is. So if VIX spikes up or if QQQ drops 2%, it will tell you that, by the way, this is happening, so I don't plan to trade today.
Got it. So will Maya search the whole marketplace, or is it something that your users put together their own basket of stocks, and then that basket of stocks is what's being surveyed by Maya?
Okay, so the thing is, with options, all of you options traders out there, you must know this, that stock selection is a very important part of options trading, because you need liquidity. You don't want to get killed by bid and ask spreads. So it took me a long time. I've been trading for 15 years, option trading for a long time, to select the watch list from which I do my trading. These are high quality blue chip companies with millions of shares traded every day.
Sure.
So Maya trades only 35 highly liquid stocks. And those are the stocks that have been back tested in the last 10 years. So the performance that you see on the website is from that. But it also has an expansive list of around 200 stocks. So if you go on the website, you run a trade scan, you can find your own trades on the website. That scanner actually uses a list of 200 stocks. But these are all carefully selected stocks. And the way I do my own trading is I don't go out from this universe. It's a hand-picked list of stocks that I use.
Got it. And just to be clear, you mentioned it, these 235-ish stocks. They're all stocks that have very good liquidity, especially around options and that sort of thing. Is that right?
Yes, and yeah, that's the only way to do options trading. You have to trade highly liquid stocks. You can't trade like some $10 stock or illiquid stock. You can do that. You will get killed.
I gotcha. Okay, let me put up a question from a viewer. Can you see that, Nishant?
Let me see. Oh, does Maya? Yep. I see. Does Maya have one position open at a time? No. So I think I just answered that question, right? So Maya has, I would say, if you go on the website, you will find a section called past performance, and it shows you all the trades. Everything is open and transparent for you. So all the trades that it has taken since April are out there. You can see how many trades it opens for a week. So I would imagine on an average 10 trades a week is what it does when market conditions are favorable. But you can see the entire past performance. All the trades are documented on the website. Okay,
got it. Molly, you have something? Sorry.
No, I just really like that you hand-picked these. So it's already a nice blanket there. And great presentation, great product. And again, thanks Tradier, because you make this possible, just bringing these partners to us. So thanks, it's been great. Thanks for your time.
Thank you. I appreciate it, guys. Thank you.
Yeah, terrific. One more question before you go. Is that okay?
Go for it.
Yeah. You mentioned the time factor. Here's what I mean by that. In my opinion, every retail trader, this is a second job mostly. And they're doctor, lawyer, and accounting, whatever their job is, or maybe playing golf or going for a run or a walk. They don't want to be in front of the computer all day. So how long does it take each day to kind of interact with Maya and do the things you need to do to be really effective and hopefully successful?
Yeah, I think that's a good question. So first of all, I mentioned that a bull call spread is the only strategy it uses. It's really simple to understand. So I would say as far as the time factor is concerned, it's almost none. Maya sends you trade alerts when it opens a trade. You don't need to stare at the charts all day or watch CNBC all the time. The system handles the scanning, which is finding trades, and monitoring, which is monitoring your existing trades so that when you need to get out, it does that for you. And when it's time to exit, you get another alert saying that it's time to get out. So since this is not day trading, there is no urgency to get in or out. If you miss a trade, wait for the next one. But trade alerts are usually valid for 1 or 2 days after the alert is sent. So, and you always have the option to run the trade scanner yourself, which will find trades for you if you miss a trade alert.
Okay. So yeah, that's good to know, I think. And you already talked a little bit about how often Maya trades, right? So
yeah.
Yep. Okay. Terrific. Well, Nishant, did I get your name right, by the way, your last name? I think I said it right this time.
Oh, man, you nailed it this time.
Okay.
I like where he says this time.
Yeah, you messed up big. You messed up big last time. Yeah.
We had to do it. I got the word.
You messed up big, Lex.
I messed up that cut. No. Max cut me 3 times. I kept messing up, and it's spelled P-A-N-T. You'd think that'd be easy,
Yeah.
right?
PNT is
Bravo,
like,
Lex.
almost
Well
like
done. You're doing great.
Uh,
Like
like a football
nailing
punt,
all the
you know?
names.
Yeah, right. Nishant, thanks so much for coming on. And say your website again so people can find you. It's just you do it so I don't mess it up, please.
Okay. Tradewithmaya.com.
Tradewithmaya.com. Awesome. All right, everyone have a look at that. He's got a great promo going right now as well. Great job. Always love chatting with you, and an awesome presentation. Appreciate it.
Thank you, guys. Appreciate it. Thank you. Bye.
Got it. Bye now. That's pretty cool, huh, Mal? And you notice what kind of the path is here for most folks. A lot of automated stuff, huh? As we get into the latter part of the day. I think that's really kind of cool.
I'm always wondering, you know, these next boys coming up are some of my favorite. So they're gonna give us a lowdown on the auto part of this.
Yeah, these two next guys, we put elbows together in the social sphere. Out in a good restaurant in New York City, man. I know it.
Where's my invite? Where's my invite?
Mal, you live too far away. Crazy. You live across the country. Well, great job, Nishant. We appreciate that. Next up, go ahead, Mal. You want to introduce these two guys? Do you know Ben and Dylan?
No, you're on a roll with the name, so right. I'm gonna rely on you.
I might mess up Ben's name because I could mess that one up. I just call them Ben and Dylan. I'm going with Ben and Dylan. They can say their last names. All right, next up, Ben and Dylan from PeakBot. Great partners of ours. All kinds of things going on with them. I'm gonna let them do all the explaining. They have so many great features, and let's listen to them with their presentation. PeakBot is next. Let's roll it with those guys.
All right. What's going on? Ben, how's my audio? Can you hear me?
I can hear you. Can you hear me? I can hear you.
We're loud and clear. We're here. We're live. Thank you so much to Lex, Molly, and the whole Tradier team for having us here on another summit. Very excited to cover a ton today over the next 30 minutes, primarily focusing on the rise of simple bots and how PeakBot here has been able to take advantage of that and do it the right way. Hasn't been easy, but so we'll get into that and so much more. Ben and I are the co-founders of PeakBot here. We started this business over 5 years ago now, which is wild. We've been great partners with Tradier for has to be coming up on at least 3 years, if I had to guess. So we're very happy to be here. What we'll cover here today is a little bit more about our automated strategies, the way in which we chose to automate options the right way with risk-defined trades, credit spreads, condors, all of the good stuff. Okay. So, Ben, if at any point you find me rambling or coming off track, you feel free to run me back on or interrupt, whatever you got to do. Okay. And I'll do the same. So Ben, I know you're in control of the slides here. I think everybody has a good idea of our background. And if you want to know more about us, you'll reach out to us and we'll tell you. But let's get into why we're here and talk about this no code options trading on autopilot here with PeakBot. So some fun facts. All right. These first few slides here, Ben and I are going to hit you guys with some facts that you may not have recognized about the trading industry for retail traders specifically. Active traders. Did you know active traders receive anywhere from 50 to 75 alerts a week? That's a ton of alerts. I receive them myself, and I'm a part of this stat. Only can act on less than half of them. I act on next to none of them. I use my automated trading bots to help me, but that's a crazy stat, right? Like we're all busy. Getting this amount of alerts every day or every week really adds up. Ben, what's your experience with this? I mean, alerts can be overwhelming and it's only half the job.
Very overwhelming. Yeah. And the second stat here, and by the way, guys, if you have questions, feel free to put them in the chat. We will aim to get at every single question and answer every single question. If we look at that second stat there, investors' returns deteriorate when they're relying on alerts alone. That happens to me. I've seen it. And then the third one, minus almost 5% on attention-induced trades triggered by alerts. Example of that happens to me all the time, probably happens to you. I get a buzz on my phone. I see an alert that either I set up on one of my brokerage accounts or subscribe to a service and here's the trade. I'm not thinking twice about it, right? I don't look further into the trade. I don't do my research, do my due diligence, and I might just place the trade. I do think that that's why, based on the stat that you spoke about, less than 50% of trades actually get acted on because people are busy throughout the day.
We're busy. We got things to do. We've got families. We've got jobs. We've got to eat. We've got to, the list never ends. And you can see stat 3 here. Nearly -5% is the average return per trade, okay, from attention-induced trades triggered by alerts. So again, you picture yourself at work, phone buzzes, spy put, go and grab that, okay? Again, you're not thinking as much, you're not doing your research, you're hopefully trusting your source, and there's good sources out there. We're not here saying that trade alerts are bad. Trade alerts are great, okay? In fact, they're necessary for a lot of automation, but you got to be able to have incredible reaction time. And we know that it's not always possible. And 1 second is late. Okay. So the alert is not the trade. It's just the first step. And algo providers like Peakbot step in to finish the rest of the way. But we'll talk about that here in just a few slides. Ben, go for it.
Yeah, so some more stats here, and these are from some recent studies, some studies from a couple of years ago as we're talking about it. Only 13% of retail traders are using automation or AI to supplement their trading. So that doesn't mean just bots. That means using some sort of subscription service to augment or supplement the way that they are trading manually. Only 13% of retail traders. That means a majority of people still are not doing that. We're going to explain why in just a minute, why that might be the case. But the industry commentary around this topic suggests that about 50% of active options traders are curious about automation, but they don't know where to start. And there are a ton of really great tools, some of which we know the owners of and are good friends with. These do-it-yourself automation tools, Dylan and I like to call it BYOB, build your own bot tools. They require you to get API keys. They require coding knowledge. A lot of good options out there, really good options out there that are no code, but then you still have to track things on spreadsheets, triggers, webhooks, so on and so forth. There's a lot out there to be had, but you really have to know what you're doing, and that's intimidating, right, Dylan? I mean,
yeah,
go out and build your own bot with no code?
No, it's not easy. I mean, we have a full team doing this for years on years, right? Like the most successful traders, hedge funds, institutional traders struggle to find the edge in the market for any duration of time. All right, so this is not an easy game in which you're choosing to play as a retail trader. But Ben, stat 2 there of over 50% of active options traders are curious about automation, don't know how to start. We talk to them every day. They're replying to our social posts. They're in our live shows. They're on our calls with our automation experts, and they're overthinking everything. And Ben, because for good reason, right? Look, the algo and automation industry of old was a scary one, and now you got to be really careful about finding the reliable providers out there. There's some really, really great automation out there, and there's some great alerts out there. You just got to do your due diligence, and that's where most people don't have the time, right? This is not just a hobby, right? You're talking about your money here and putting it in play, and you gotta take it seriously. So find the right tools and trust it. And the insight here on the right hand side, it's not automation that's the problem, right? Don't be intimidated by the automation. It's the strategy behind the automation. It's making sure it's easy to use, it's accessible, and most importantly, affordable, right? And getting you the results that you need. So go ahead, Ben.
So we've kind of laid up the problem here, right? Alerts are fantastic if you're in front of your screen and you're able to place that trade yourself. There's a hesitancy to trust beyond that. There's a hesitancy to trust AI in this industry, and that is what the number one reason that people don't use bots are, from what we found through our own studies. The number one reason is people don't trust bots because they don't understand what they're doing, right? We provide, as Peakbot, we provide bots with very clear logic, limited inputs, and we find that provides higher user retention Dylan, you're talking to traders every single day, many traders every single day. I talk to traders as well, but not as much as you. Would you say the number one thing that people ask is, hey, what's this bot doing?
Absolutely. And well, first question is, how much money is it going to make me? The second question is, what's it going to cost me? The third question is, what's going on here? So let's be real. We know what retail traders want. They want to know that there's results. They want to know what it's going to cost. But if you got a good retail trader, somebody who really is interested to get this going and get it right, they're going to ask, tell me what this strategy is doing. So at PeakBot, we provide full transparency, as Ben said, clearly stated logic for every one of our strategies. You're just not going to find that. You're just not going to find automators, algo providers, strategies that are sharing every detail of entry and exit. Okay. We do it for a reason.
Quick comment too, because I don't want this to sound like we're just talking about, how great PeakBot is. There are bot providers out there, and anybody that is interested in getting into trading with a bot, again, we strongly urge you to consider who is behind that bot. What is the strategy behind that bot? What is that bot supposed to be doing for you? We'll get more into that type of information and the types of questions you should think about in just a couple of minutes here. But usually what we found is the simpler, the better, the easier to understand, the more comfortable you are with a bot. And that's a huge hurdle for a lot of people.
Yeah. And Ben, we've learned our own lesson here, right? We've been automating for retail traders for coming up on, over 5 years now. And when we started, Ben, we gave the retail trader, we gave the subscriber more access to make decisions, more tools, more ways for them to individually configure an automated trade. We know what happened, right, Ben? Remember when we had built in, when you can plug in your own take profit and stop loss on some of our equities bots? What a nightmare. What a nightmare.
Everybody was plugging in 1% stop loss. 1%.
Yeah, and we see I saw 8 losses in a row. What's going on? Well, you had a 1% stop loss on Tesla. And this was an equity strategy, and Elon just tweeted something that wasn't very favorable. And this was, but the point is, we've learned now with our strategies, and we're going to dive into one of them that's really hot right now here in just a second. But the less decisions that you need to make as a retail trader who's busy, lacks the time, lacks the strategy, lacks the discipline, simple decisions, okay, on the front end with a lot going on in the back. And we'll dive into that right now. So one of the strategies, our newest strategy. Now, when I say new, don't get worried about it. There's been 10 years of backtest data on this strategy and many, many iterations that we ran before pushing this bot live. It's currently in beta. We launched it back on September 17th, live trades. Yeah. So been live here for a little while now. This King AI strategy, I like the iceberg picture you got here in the middle, Ben. It does a good job of saying, hey, look, on the surface level, this is an incredibly simple strategy. It's a 1DTE iron condor on SPX. Okay, so we're trading the entire market, if you will. Once it's in, right? Keep calm and condor on is our saying here at PeakBot. And the data shows that it's better to do so. And so it truly is set it and forget it. So the user experience, and we'll show you a picture of what that looks like here in a second. And there's demos on our site and everything else. But it's so incredibly simple. Select what strategies you want to automate, set your budget, and that's it. All right. So we want to keep things simple. However, behind the scenes for King AI in particular here, it's called AI for a reason. We're utilizing machine learning models that we've built here internally that are analyzing over 300 different market data points for the bot, to enter a trade. Okay. We've got over 10 years of trade data, which is available on our website, peakbot.com, if you want to check it out, as well as live trade data. But all that, when I say all of this is happening, the model is here to select two things. What strike prices / delta do we want to enter the trade on for this iron condor, okay, which is a neutral range-bound strategy. But I am going to strip it back for a second. For anybody who may not be familiar with an iron condor, okay, we're selling an iron condor. We're short, so we're collecting a premium. We have both a put credit spread and a call credit spread creating a neutral range bound position where we profit if SPX stays within these two prices. We're going to share a visual of that in just a minute, okay, just so you can kind of see what's actually happening on the chart. But AI and our model here behind this bot is to determine A, what strike prices do we enter at, and B, should we even take the trade at all? Because sometimes the best trade is no trade at all. Okay, so when there's certain economic events or volatility index is too high or too low, bot it will not enter the trade. So that's another decision that you don't need to make. A lot of us have great strategies, great trading strategies. We just don't know when to trade them. All right, so that's not a worry here with PeakBot and any of our strategies, of course, including King AI. So a little fun fact here at the bottom, King AI actually skips nearly half of the trading days. Okay, so it's set to trade every day. If the criteria is met, it could trade every day. A 1DTE iron condor, meaning it opens today, set to expire tomorrow. And we'll sit out. Okay, there's been a lot of really messy trades that we don't get our part of because the bot dictated no entry today, too volatile, or whatever it might be. Ben,
That's right.
Tell me what I missed high level on King AI. If we're good, let's keep moving.
No, I think you're good. Let's keep on moving along here. And you mentioned there's only two decisions for the trader. The bot is making two major decisions, but for the trader, there's only two decisions here. That first decision is how much cash am I going to set aside for this strategy? So you set your budget, and then you really just decide if you want to activate the bot or not. It's really that easy. And I know, Dylan, whenever you or I give a demo and we show how quick it is to get a bot set up on PeakBot, it's kind of like anticlimactic, right? Like,
yeah,
it takes like 20 seconds to get a bot set up. But here's some of the fun facts about the King AI strategy. Since, and this is back tested and live trade results that we're talking about here, since we started running the back test in January of 2016, so that's almost 10 years worth of data, of trade data right now, there's been a 95% win rate. We're seeing that play out live right now in real accounts at the moment. We've got a decent amount of people trading King AI at the moment with us. I actually just got a report before we hopped on here. I was surprised at how many people are already on King AI.
Numbers growing every single day. And we'll show you the live results in a second. Go ahead, Ben. Sorry.
There's been an average of about a little over a 5% average monthly return. This is the really cool part. So Dylan, you mentioned we've got AI ML models that are behind the scenes doing all this work. They're analyzing over 300 different data points at the time of entry. And that includes things like options Greeks, ATR, moving averages, RSI. We've baked a lot of different data points into this model, and it only takes about 1.5 seconds for that model to process a trading decision. That is to trade or not to trade. And that's also, hey, what strike price are we going to place the call credit spread of the condor and the put credit spread of the condor? Are we going to place at the 10 delta, the 20 delta, the 25 delta? So the model is looking at, based on a confidence level, what delta is the optimal delta to place the strike price at for that particular trade. And it's been really cool to watch this happen, because I know for me, like, does a much better job at picking deltas than I do.
Oh yeah.
But it is learning on itself over time as well, right? Like, there's over 1,000 trades that we have trained it on, but every day there's a new trade placed. And even if there isn't a new trade placed, we will simulate a trade in the back end. So that way we have that data to further train the model on. So every day this thing is getting smarter. And that's what I really love about it, Dylan, because we know, and it's important for everybody to know, that most trading bots, and maybe we'll even say all trading bots, have a shelf life before adjustments are needed. And that is another thing to look out for. If it's not PeakBot that you're going to automate with, ask yourself, hey, is this bot provider updating their strategies periodically? Because the market's changing, strategies need to change along with it. The edge will work itself out after a certain period of time. So that's one thing that I love about this strategy, is always learning on itself. It's constantly adapting to current market conditions. And we're seeing that play out, of course.
Awesome. So we can click on over to some of the live results here. Okay. And I believe we entered one today, right, Ben?
We did.
So we're in one that's going to be set to expire tomorrow. So we'll see if we can continue to pad the stats here. But let's talk about numbers. And actually, before we dive into it, because I know you're already reading it anyway, because this is what you've been waiting for. Just to strip it back, all of this is made available incredibly simple by integrating your Tradier account. Okay. And I want to talk about, along with the results, how much money, truthfully, if you're on another brokerage for any reason, how much money can be saved by moving over to Tradier if you're utilizing their Tradier Pro or Pro Plus. When you're doing SPX, iron condors every day, Ben, this adds up, doesn't it? I mean, absolutely insane. If you're trading with real volume, 25K, 50K, 100K, you're going to spend thousands at the end of the year in fees. I know I'm going totally off the track here, Ben, but I talked to 3 people today from a broker in which we normally wouldn't state here on this channel. All right. And I can't believe how much they're saving or spending on that brokerage just to come over. Anyway, that was just a little plug for Tradier because they deserve it. Real live results. So this bot, King AI, launched on 9/17 of this year. All live trades taken. Again, go to our website, peakbot.com. You'll see the full list, okay? A whole Google sheet of results. But we've won 23 of the first 25 trades, all right? We always say this, right? I'm going to say one of those losses was on the Trump China tariffs on 10/10, and we just took a beating, as probably did most iron condors that day. But so that's a 92% win rate. The cash on cash return is over 68%. Now, that's based on the $2,000 needed to place each trade. Okay, cash on cash. It's a $10 spread, so you need $1,000 there minus the premium you collect. Plus, you can be in tomorrow's trade at the same time. That's where we get to 2K. All right, so cash on cash, 68%. It's made over $1,300 since 9/17 in just 25 trades. Okay. So an absolute fantastic strategy. Just to provide a little bit of a visual here, Ben, if you want to head on over to the next slide here, and I'm going to make this full screen just so people can see it, because I think it's important. This is a visual of a live trade from King AI. This is representing you trading 1 unit. I think it's important to mention that with PeakBot, okay, and a subscription in which we are going to be handing out free access to King AI, okay? So hang tight. It's really important to visualize this and know that this is per unit, and you can trade multiple units with PeakBot, all right? So this is a real trade, $220 win from October 1st into October 2nd. So 10/2 was the expiration date. You can see on screen here, the trade opened on 10/1, right around 3:15 p.m. Eastern. So it enters sometime after 3 Eastern, okay? And it's set to expire the next day, which is that next vertical line there, okay? So you can see our profit zone. This is where we are trying to stay in between. Our iron condor on this day, Ben, if I had to guess with a $220 premium, if I had to guess, I'm going to state that this was probably around the 15 or the 20 delta, somewhere around there. Okay, I'm not looking at it off the top of my head, but to collect $220 on a 1-day SPX iron condor, that's fantastic, especially when in a day like this, we never even sniffed trouble. Okay, we can see we got in the next day, the market opened pretty high, but came back down very quickly, and then just chop and float right in between our profit zones. So we expire out of the money, and we take home $220 per unit on King AI, fully automated. Okay, so it's important to understand that this is just one of PeakBot's automated strategies. This is a neutral range bound strategy where we want to stay in between 2 prices. We have bullish strategies. We have bearish strategies. We have something for every market. Okay. So it's very important to keep that in mind, but I wanted to give you guys a visual as to how you can win with King AI and how we're doing it 95% of the time. Ben, back to you.
Back to me. So we asked this question a little bit earlier, what's holding people back? And we kind of determined it's trust. So here's a couple of facts that will further hammer in that point. 61% of traders indicated they would not be open to using AI/automation when trading. That number is going down year over year. I think the stat for 2024, this is something that eToro seemingly does every year based on what I was able to find. That stat was at like 68% previous years. So that stat is going down. More and more people are becoming open to it. And as the adoption of AI further increases, which is inevitable at this point, that stat's going to go way down, and way more people are going to use AI and automation tools. In fact, trust increases by roughly 200% when a trading bot's logic is transparent and uses a familiar strategy. Now, in the context of this study, bot's logic, meaning the automation strategy, whether it was for retail or whether it was for a hedge fund, overall, the increase in that trust increases by about 200% when you know what the strategy is. And when we think about it, we trust things that we understand, right? Everybody, I'm sure everybody listening, with the exception of maybe a few people that have never been on an airplane, we trust autopilot in airplanes. And that's because we've seen it work before, and we see it work every day. Yeah, do accidents happen? They will.
UPS trucks go down. Yep.
but for the most part, we're all trusting that autopilot. And with trading, where the stakes are much lower than an airplane, the same trust can be established when you peel back the curtain and just show what is happening. So trust is earned by showing. We've absolutely found that over the past 5 years of doing this. People don't want to buy into a black box system. They want clear rules. They want consistency. They want to know what to expect. And if you want to know what our strategies do, it's all free. It's all information that you can find at peakbot.com/strategies. If I had to guess, I'd say Dylan's typing that right now to put it up as a banner on the screen.
Yep. Trying to.
But
what was it? Was it just our website, right?
peakbot.com/strategies.
Okay. There it is.
Awesome.
All right, Ben. Moving on.
Moving
backstage. Go ahead.
Moving on. So as we were mentioning before, we kind of brought out a couple of little tidbits of what to look out for when you're considering using trading bots. Shopping for a bot is like shopping for a mutual fund. You want to know the thesis, you want to know the risks, and you want to know the process. So you want to ask yourself, hey, is my bot AI? What happens if the market crashes? What rules does my bot follow? Can I modify it? Can I turn it off during earnings? Can I do X, Y, Z? And you have to make sure that that bot fits within your comfort zone. Now, we get people that come to us and say, hey, can I modify certain parameters of the bot? And our answer is no. We designed a very simple process intentionally. We want to keep things simple. And as we progress further in technology and technology available to retail traders, we do see a consistent rise of options available for trading automation and simple trading automation. And I love that there's more and more adoption every single day of this technology. I do think that it's a huge supplement to people that cannot be available to place trades on their own, but want to be active in the market and maybe don't trust anybody else with their money, but will learn to trust a bot that follows a consistent and clear path. So, Dylan, you want to round us out here, and then we'll get to our offer.
Let's do it. So, look, algo trading can be scary. Using an automation, using a bot to trade for you while you're busy with work, it could be scary, and we get that. But that's why you got to be with the right people. That's why you got to have the right people in your corner. We have been doing this for quite some time. I like to say this. We did this before there was ChatGPT. We did this before AI was AI. When PickBot was founded, AI was still Allen Iverson. Okay, maybe Andre Iguodala. Certainly not artificial intelligence.
To the everyday person, yeah, absolutely.
Yeah, totally. So look, we do this the right way. We don't cut corners, and we give you full control. Yes, you're using a tool and a great brokerage partner like Tradier to execute trades and place them fully automated on your behalf. We call it hands-free trading. Okay. And the beautiful thing, and we've talked to our traders over the years and we've run polls, and we know that 82% of our traders, I think it should be 100, but that's fine. 82% of our traders feel safer knowing that they can manually intervene at any time. Log into your Tradier account. You want to get out of King AI strategy tomorrow at 12 o'clock because at 3:30 there's a speech and it might throw up something, and you get out. Peakbot's going to pick up where you left off. No problem. Now, I'm not a financial advisor, but I'll tell you what I see is people create bad habits of getting involved too much and letting their emotions take place. When, Ben, I give that example the whole time, like on our one Shorebo trade or King AI the other day. I'm ready to get out for a $220 loss just to save myself, but I let it go and we win 130. Like, you know, let the bot do its thing. But you're always in control. You know, okay, you have risk-defined trades here. We don't have any naked options. You know what you're risking going into the trade. You know what stock you're trading. You know when it's entering. Again, all of the details are there. And if there's no criteria met to make this a good trade, it's just simply not going to trade. So we handle the placing of the trade. The broker handles the execution, and everything else is handled for you. So Ben, let's talk about what we're giving the good people here. First of all, QR code. For those of you who know how to use a QR code, just whip out your phone, grab an image of this code here. We're handing out a free subscription to our King AI strategy. Okay, so those are the results in which we covered here today. Know that you're getting King AI free for 30 days. All you got to do is integrate with your Tradier account and you're all set. Okay. I think the URL is funny. I don't think we can.
Yeah. Free King AI, freaking AI.
Yeah, so if you want some freaking AI, just head on over to, and Ben, was that a mistake? I think we got lucky and stumbled into that.
It was unintentional for sure.
Yeah, that's what I'm saying. Okay.
Yeah.
So head on over to Freaking AI, all right, or use this QR code. Get a free month of reliable automation that you can trust here with the Peakbot team. And just so you know, when you're ready to rock and roll, you get access to all of our bots. We've got 5 automated strategies right now in the starting lineup and more to come. So peakbot.com/free-king-AI, or just use the QR code. Ben, I know we're close to time here. Maybe Lex, Molly, you guys tell us what we should or need to do here, but we're very excited to have presented here on the summit today. So thank you.
Well, gosh darn, here we are.
We're here.
Great job, guys. Awesome. As always, you guys do such a wonderful job. Thanks for all that. I got to be honest, the freaking King AI, that's really good. Tell me you didn't think about that. You thought about it.
I didn't put the link together, and I didn't even realize that it was funny until somebody pointed it out. But
that's the best kind, right? That's awesome.
Yeah.
I will say I'm really excited about the fembot that you guys are building, and it's not bring your own bot, it's bring your own babe. So we're gonna go with that. And that's what makes Tradier so great, because it brings products like yours, which, you know, I don't know, bots, if you don't, it sounds daunting, but just jump in. And if you're going to jump into bots, jump in with these guys, because it's like you say, it is antiquated. It's so, you make it so easy, and you want to have that under your belt, because you just want to feel cool when you walk into a bar. You want to be talking about your bots. I mean, that's the only reason.
What do you want to be talking about?
It's not a date. You want to say I'm a bot trader, and that's instant points. And that's
it is.
It is. Your product. But thank you, Tradier, for bringing you guys. Yeah.
Oh, that's awesome. You guys are great.
Thank you.
So a couple questions. Got to have a few questions, right?
Sure. Hit us.
And Molly, if you have any, fire them away. But first one, so and Ben, you and I talked about this at dinner, I think in NYC a long time ago. So you chose to make, I'll just call them simple bots for lack of a better term, instead of going down the BYOB version. What was the reason for that? And if you say everyone's dumb, I'm going to agree with you, because I'm dumb. I am totally dumb, and I could not do it myself.
The real reason is I'm dumb, and I was the one having it made. No, I mean, I think, and Dylan, feel free to chime in here. We wanted to build simple bots because people will understand simple bots, and we knew very early on that we needed to be able to gain trust from people, because hey, this is a big deal. A trading bot is literally entering your trading account, and it's going to place trades for you. That's kind of scary. right? You want to know what it's doing. So if I came up to you and I said, hey, yeah, we're following this the MACD, and we're looking for RSI to be below 30, and 10 different indicators, and you're trying to figure it out on your chart just so you could like track what the bot's doing, because people do that, right, Dylan? People will track the chart and make sure the bot's doing what it's supposed to do on the chart. And we're like, hey, just let the bot do its thing. But if you had to explain these complex strategies to people using all of that jargon, you lose them.
I mean, 0 DTE plus iron condor. I mean, does it get more complicated and scary than that? And so that was like the perfect combo. Like my heart stopped. I'm like, oh my gosh. And so, yeah, you need bots for those guys, especially rolling.
Now, what happens if a user says, hey, what about this idea? I would like you to make a bot that is called the whatever, and it does X, Y, and Z. Is that something you would consider? Oh, you're on mute.
Dylan, mute.
No, I was on mute. I get fined for that. I'm going to be having to take the QuickBot team out to dinner now.
Yeah, the commissioner is going to send you a fine.
So largely, Lex, to answer your question, we listen to our traders. Our traders are some of the smartest people in the world. We've had traders save us before with a new idea and everything. But I don't want to put the idea out there for people watching that, hey, you can come to us with your trade idea and we're going to automate it. Largely, no. However, we listen. We are constantly updating our strategies. And a lot of the times the updates we need to make to our strategies are because we've heard some pain points or some great stories about returns on specific strategies, and we take a closer look and we get more involved. And the last thing I'll say about, the BYOB, it's really easy to build a strategy that looks great on paper with monopoly money in a trading in a paper account. And then you launch it and you get kicked in the face and you're just like, what? I did not see this coming. My bot didn't lose for 100 days. How am I? So the BYOB is good if the person who built it really knew what they were doing. And it takes a village. I mean, PeakBot, we've got a small village here, running and making updates to these strategies in which we're providing to retail traders today. So I know we're over time, so I apologize unless we're the last.
No, that's okay. We got a minute here. So I'll give the two-part question then. So we can keep it moving. You mentioned that, obviously trust is a huge factor. Part one of the question is anything that are just red flags or just no wake zones whatsoever. That's number one. And on top of that, they don't really relate, I don't think. If someone said to you, hey, I know I can pull these bots off the shelf and use them, wonderful, but I want to look under the hood and poke around and see what these things really do. Is that available as well? So can you answer both of those? And
which one you want, and I'll take the other one.
I'm going to give the quick answer here. So,
go ahead.
In terms of the no wake zone, right? If you go to and this is going to answer both at the same time. If you go up to a bot provider and you say, I want to take a look under the hood, and they say no, I think that's a red flag. It's something that we do provide. You could go to peakbot.com and check out all of our strategies and the logic behind the strategies. And you could ask us questions. You could set up time with myself and Dylan or other members of our team to talk about these strategies, to learn about them even more. We're very generous with our time. We want to build that trust. We want people to use this that are serious about automation. But if the bot provider is not telling you what they're doing behind the scenes, or they're not updating their strategies, those are kind of some red flags that I would be aware of.
Okay.
Yeah. If they don't lose, if the bots don't lose, they lose. Run away.
Run away. You get it.
And if they're only showing back tests, run away. Back tests are great, but they're not the live thing, right? So you got to see live trades as well. So those are some things to look out for. And PeakBot provides education on at every level. So if you want to know more about how these bots are built, we've got it for you.
Awesome. All right, guys. Thanks so much. As always, great job doing that. Always a fun presentation. You guys are great personalities.
I just ask one question. I'm dying to know. Okay, how are you guys stepping into the DeFi world? Are there DeFi bots, and what are those? And I'm just so interested in that.
Oh man, we're not touching that space right now.
All right, next summit.
Yeah, there's a lot of options though. There are a lot of options there.
Yeah.
It's much less regulated. It's much harder to find a reputable provider. in that space. Maybe we'll make our way there one day.
Okay,
but
cool.
hey, we like to keep it simple. Right?
Yeah.
So,
Oh yeah.
so
All right, guys. Thanks so much. We'll catch up next week. Awesome.
Thanks.
All right.
Thanks,
Bye.
guys. Bye now.
Welcome to Tradier's upgraded web platform. Derived, index, and quote data. What was once delayed is now updated more frequently, helping you track market shifts and act with profits. Enhanced Research Center. Get real-time insights and market data all in one place. Stay ahead with built-in trading signals that help guide your next move. Getting around is easier than ever. All your essential tools just a click away. Efficient multi-leg order entry. Quickly build complex strategies with an intuitive layout. String-mined trade ticket. Check orders, monitor positions, and close trades faster. Clean, readable quotes. Easily navigate the market with simplified quote views. Manage your account funding with ease. Option chains. Jump between strikes, spot opportunities, and build strategies fast. Use the trade stager to construct your trade, then send it straight to the ticket. Want to put your portfolio to work? Enroll in fully paid securities lending and earn passive income from your long positions. Log in now and experience the new standard in trading.
Dang, those commercials are good.
I know. Bravo.
Hey, look at your little background there, Ma. I feel like I'm in a Tao at Vegas.
Right.
So,
I'm in some sort of Tropicana, Florida.
Yeah.
I don't know what's going on here.
pretty vibey. All right, let's get rolling. Next up, Ernie. I'm going to say his name wrong. And after we're done, he's not going to see me till the end. I'm going to have him say it.
Lex, you're being way too hard on yourself. You're doing amazingly. Like you're just...
Varidamos, and I saw the I in there. I was going to say Vardamos, but I don't think that's right. Varidamos. Ernie's a genius, I think. He fly on the wall, zero DTE specialist. He's going to tell us all about his offering. The original zero DTE butterfly strategy is part of it. I'll let him take it over, and we'll come back and ask questions at the end. What do you say, Ma?
I love it. Let's go.
All right, let's go, Ernie. I think Ernie's having a little bit of an issue here. Let's let him figure that out. This requires the blue hat. So while Ernie fixes his little issue, Molly and I, where's Molly? There's Molly. I mean, you never know. You could be in a costume change, and I throw you back in.
Actually, I was earlier. Someone could in the backstage could have seen that, but I messed it up.
That might increase viewership too, for God's sake.
This is the cool thing about being live. Like, this is live, so this is great.
I know. Well, inevitably, someone's going to have an issue with sound or something. Although I did start to hear him a little bit, so I'm not sure what happened there.
Yeah. So anyone with a keyboard that great, I want to tune into.
That's pretty cool.
Yeah.
Ernie's a good guy, man. I hope he gets this thing. Let's see. He's coming. All right, he's got his hands up. Let's give it a shot, guys. All right. Ernie, you good?
Can you hear me?
Yeah.
I can hear you. All right, we're going to get out of here so you can get rolling.
All right, wait. All right, hopefully everything will work here.
All right.
All right, go ahead and share your screen, I think.
All right, let's see. Right. I don't have any controls here.
Okay, that's all right. We'll figure it out.
So just try to share your screen right there. And the boys in the back room will help you if you need help with that.
All right, I'll give it a shot.
Okay, so yeah, hit share screen. And then I think you can share the entire screen if you want versus the window. I don't know which one you prefer, but.
Yeah.
Okay, give that a shot. See how it looks. Yep. Pick the screen.
I have to go through the security.
Oh, yeah. You got an Apple or something?
Yeah.
Yeah, those are always fun. I have one too.
Entire screen.
That's a source of I don't know,
Right, Lex.
source of soreness.
We try.
Yeah, let it share. Do all the unlink the privacy, etc. On that note, it's getting close to cocktail hour, and I'm going to take a little.
Right. Like you to.
And I already did this once with your guys in the back room, in the green room.
Okay. How's it going?
It went fine, but now I have to do it again.
Okay, that's all right. Take your time. Take your time.
I was telling them I've only been in technology for 45 years. What do I know? I'm still learning.
It's always the way.
So it tells me that I have to enable it, and I keep on enabling it, and then it doesn't enable. All right, I'll do it one more time.
Yeah, try it again.
Share screen.
Molly's doing a ChatGPT version.
Entire screen. See, when I hit entire screen, it doesn't pop up. Open system settings.
Yeah. Maybe try sharing just the window or something like that. The window you want to share. I'm
getting there.
Okay. Yep.
Oh, good. The boys are helping him back there.
You know what happened? He just got like exit stage left.
You got the hook.
He got the hook. All right, coming back.
The floor drops out.
Did that do it?
There he goes.
All right, try it again.
Let's do it.
You can see me, right?
Yeah, I can see you, but we can't.
All right. All right. Well, I couldn't see you before.
Oh, okay, good.
So I'll share the screen.
Let's see what happens. I'm hoping for goodness. Oh, something happened. Yeah. Okay.
So you see it. So you see a screen, right?
All right.
Now we're gonna get out of here.
We get the dropouts. So
all right, Mal. I'll see you on the surf side.
Okay.
All right, Ernie, go ahead and go at it. We'll see you in 20 minutes or so. 25 minutes.
Awesome.
Okay. Thanks, bud.
All right. Thank you very much. All right. How you doing, friends? My name's Ernie Varatimus. I'm the owner of 0-DTE.com. I've been doing 0DTE trading for, well, I don't know, probably since 2007 or 5, I think, when they came out with weekly options. And I remember I started doing that with Apple. And then I've been an institutional trader and a hedge fund manager. And so in that time, I kind of dropped away from it and started focusing on futures. And then as around 2017 rolled around, I noticed that 0DTE was really picking up amongst institutional guys. And so I started to look into it. I developed a strategy. I saw a service that was there. I decided to join it. I couldn't believe what they were doing, trading iron condors with unbelievable risk for tiny little profits. And I said, oh, there's got to be a better way than that. And so I showed them what I call the inversion of risk strategy, which was nothing more than an out-of-the-money butterfly. And it showed them how to take very small risks for huge payoffs. So anyways, a bunch of people started following me because they started making money and stopped losing money. That was the big one. I developed a huge following within the service, so they kicked me out. So that was my impetus to start my own service. And it actually started with going on to Discord, and a bunch of the guys at the service followed me. And so we started farting around with 0DTE strategies, and I'm showing them this inversion of risk strategy and the idea of asymmetric trading. And so that's a presentation that I'm going to show you. But that led into a coaching service that I've been doing now for 5 years. And then most recently, I've been developing tools along the way. Just so you know, my background is not only in trading, but prior to that, I was heavily into technology and, in fact, a chief architect for Sun Microsystems during the dot-com era. So I've got a lot of experience when it comes to systems and development. So I decided to build my own tools that would give us visualizations of the market. But anyways, I'm going to go through a very quick presentation and then a little learning experience about options and gamma and volatility and premium decay and how this all kind of leads into it. I'll be very quick with that, and then we'll jump right into the tool and how it solves all that. All right. So the first thing is you never predict. You want to be positioned. In other words, everything that I just already said here, that you want to pay a little, position yourself, and be in position for that big move. Now, it's not always going to come. In fact, most of the time, we are in what we call the roundabout. If you've read The Tao of Capital with Mart Spitznagel, he has that term called the roundabout. That's where you're essentially churning and staying in the game. Small wins, small losses, and positioning yourself for the bigger win and waiting for that to happen. And when it does, it pays big. The key here is that you're not drawing down. You're not, you don't have big volatility of returns. You keep on moving forward and raising the needle. So everybody else there trading with huge risk. I mean, I'm sure all of you have spent most of your time, worrying and all about risk management and wondering if you're doing it right, or maybe you're just not quick enough, or you don't know the right strategy, or you think your emotions are getting in the way. Well, all of that is true, but the reason why is because you're just trading the wrong thing or trading the wrong way. So that's the key here. All right. How traders bleed. We just click too much, we get nervous. And why do we get nervous? Because we're faced with huge risk to make what? A few bucks. It's like, what do they say? Picking up nickels in front of a steamroller. You're chasing the news. You have no exit before the entry. That's a very good one. When we get into a trade in my service, we already know our scenarios and what's ahead of us. So we might have 2 or 3 scenarios already planned out, and when they happen, we know what to execute. And it's simple. Well, it makes it simple. We're not guessing. All right, next slide. Anchoring to levels, instead of the clock. That's important. A big part of what we do, like I said earlier, is we're kind of stewards of volatility and gamma and premium decay. But what's more important, even in what some people will call, it doesn't matter what direction or directionless trading in options, which really isn't true. There's still direction, and it's going to bite you if you're not positioned correctly. And so we anchor ourselves in the structure of the market using volume profile and also gamma. In fact, you're going to see in the tool that I'm going to show you how volume profile and gamma work together. Well, they don't work together. They're kind of an artifact of one or the other. So volume profile obviously is where all the trades have happened. You have nodes and then the lack of nodes that I call volume wells. And then you have gamma walls that are kind of the institutional and the dealer positioning for that day. And they're all lining up along the edges of those structures. So doesn't it make sense for you to be lined up there too? And that's one of the base strategies that we use. When we trade according to how much volatility there is, what the potential is, and we are looking for a structural level to lean on so that we have an increased chance of being successful. Most plans skip exits and journaling. That's interesting. So yeah, I'm sure that everyone's told you that you have to keep good logs and good records and journal, but how many of you actually do it? That's what I really want to know. So small cost, optional, big upside. Spend tiny, fixed debits, hunt rare, outsized profits. If you're going for win rate, you're going for the wrong thing. You should be going for the return on the capital that you put to work. That is way more important. And also controlling your Sharpe ratio, the level of volatility you have for the amount of returns. How efficient is your money that you're putting to work? That is way more important than win rate. Win rate is a canard. In fact, most high win rate strategies, the reason they're high win rate is because you have to put up a lot of money for a tiny little win that might happen often, but it is inevitable that you're going to hit that big loss. It happens to everybody. There's no way to stop it. You're going to hit it, you're going to draw down, and you're going to go into a tizzy. And then when you go into a tizzy, what happens then? You start making worse and worse decisions, and those decisions result in a spiral, and it's hard to get out of. Once you've drawn down 20%, it is super tough to get back. You've got to make back around 30%. You get on a 50% drawdown, now you have to make a double in order to get back.
That's craziness. Why people allow themselves to do that is just beyond me. When we trade, we're shooting for drawdowns less than 2%, 3%, maximum 6%. And it's not that hard to do. You just have to position yourself correctly and not take those huge risks and sit there and be patient. You're in the roundabout waiting for that big payoff. And 0DTE is really the ultimate way to do this. And you'll see that in a bit. I'm going to skip ahead a little bit because we're going to talk about dealer gamma levels and volume areas and all of this stuff. Let's see, what else do we have here? Yep. You're going to see how our tool will take care of, see, the 5 steps, same order daily. This is absolutely right. So every morning we're looking at volume profile. We're looking where the gamma walls are located, seeing if we're in compression or expansion. I know all of these terms for a lot of you are just Greek, right? I happen to be Greek, so I can translate for you. And not right now, but let's just say that you don't really need to understand all of the jargon. The jargon is really meant for those people who want to seem superior. What you really need to know is, what is the chart, what is it doing, and how is it going to affect me? And you're going to see how our tool will tell you exactly that and guide you through it and hold your hand through the process. So we get our gamma walls in place, our volume profile, our LVNs, our HVNs, that's the low value nodes, high value nodes. What regime are we in, pinning or expansion? Volatility regimes, are we in zombie land? Are we in this sort of Goldilocks zone? We're checking our heat map. We're looking for convexity. What does that mean? We're looking for those trades that nobody else wants, but they're right on the edge of what everybody else wants. Think about that. We take trades that are just outside of where everybody else wants to play. Now, we don't get hit as often, but the big plus of that is that we pay very little for those trades, and we get paid big. And build the fly ladder. That's interesting. So we'll get into that. I'm trying to rush through this because I want to get to the meat here. Fewer guesses, more guardrails. Of course, you want to be more efficient with your trades. Who wrote this thing? Expect small scratches and small losses by design. That's true. It takes patience, though, with this kind of strategy, because you're not there to win every day. I know everyone likes that dopamine drip, but that's not what pays. The people who have patience are the ones that get paid. Sometimes you catch a move and the payoff is many to one. In fact, I've had trades on a daily basis. Most people are in options trading are just pleased as punch to get 10 or 15% return on their capital. When we trade, it would be unusual for us to take trades at 10 or 15%. We're typically looking for 200, 250, 400, 1,000% return on our trades. All right, so that's and when we lose, we're losing super tiny. Okay, we'll get into all this. Anything else here? The problem is decay bias. Okay, yes, of course it is. And we'll get into decay bias right now. So I'm going to talk a little bit about premium decay, more specifically the rate of decay and how it affects your trading. And what you're seeing here is a weekly option. That's what we're trading as 0DTE traders, the SPX, the NDX, SPY, the ES, the NQ, all those index things. They're all trading every day. They're weekly options, but they have expirations every day of the week. And this is showing you a weekly option and its life cycle. Each column represents a day in the life of that option. It starts off with lots of premium, and then over time, it slowly decays until there's none left. And you can see in the 0DTE day that decay is incredibly high, the decay rate. And on that last day, man, you can have as much as 50% of the total premium that existed in that contract on that last day. That's why everybody loves 0DTE. But the other part is gamma. Gamma is the steep curve that comes along with that and the rate of decay. So the thing is that this rate of decay is kind of a normalized view. It changes dramatically depending on one thing, volatility. If volatility is high, that decay rate starts slowing down. Options become bloated with premium. And so that naturally raises the value of your option contract. On a single option contract is what I'm talking about. In a low volatility environment, the decay rate is increased dramatically. So most of the premium that you're hoping on that 0 DTE has already been decayed on the day before or the day before that. And so you can say that the rate of decay has increased dramatically in low volatility. And when you get on that 0 DTE day, there's very little premium left. And so we'll see what that looks like in the next slide, kind of like this here. So you can see the high rate of decay at the top, lots of premium, lots more left on that last day. In the low volatility, it decays faster and before that last day comes. So we have a lot less premium to collect on that day. Now, here's the kicker. We trade butterflies. Why do we trade butterflies? Because they are the most efficient way to give yourself a risk to reward, play direction, and play premium collection at the same time. The easiest way to do it. And so let me show you what happens when we have these two different environments. So we have low volatility and high volatility. The effect of accelerated decay in low volatility is that, as you can see on the left-hand side, on that option, now I have two butterflies here. They're both sitting there, same size, at the money, and they started at the same time, let's say at 10 o'clock in the morning, right? And the first one is showing you what that butterfly looks like when volatility is super low. Maybe the VIX has dropped down below 16, 15, whatever, and it's just a dead day. All that premium has already decayed. It's gone. And so the potential in that fly is very little. And so what you're left with is huge risk, tiny little potential. And it's the same thing no matter what option that you're trading, all right, because we're after that premium. On a high volatility day, it's exactly the opposite. There's lots of premium left, so therefore we have lots of potential left in that trade, lots of profit potential, little risk. You see the difference? Where would you rather trade? A lot of people think that low volatility is less risky, and it's not true for options traders and specifically for 0 DTE traders. High volatility is our lifeblood. It gives us low debit, high profit potential, and probably the best part about it is the gamma. What is gamma? Gamma, next slide. Gamma is your sensitivity to price movement. In low volatility, because of that accelerated premium decay, we have very, very steep profit curves. And that steepness produces a very high sensitivity to price movement. So if price moves, say, 10 points, I fall down the edge of that gamma curve, that profit curve, like you wouldn't believe. I slipped up a little bit and gave away the secret. So in low volatility, gamma is super high. My sensitivity to price is super high. So that's another problem. High risk, low profit potential, high sensitivity to price. Every single part of low volatility just totally blows. In high volatility, because we have a lot of potential, that profit curve is super flat, right? And so the sensitivity to price is very small. That means that the gamma is super low. So now we have low cost, high potential, low sensitivity to price. Everything about high volatility is where you want to be. Now, we can't choose whether we have high volatility or low volatility. The only thing that we can do is make sure we come to the game with the same risk in mind. And so that's what we do. But because of this situation, when we have low volatility, it forces us to trade smaller. And when we're in high volatility, we are released to trade about as big as we want because there's less risk and more potential. So that's what we do. We figure out where is the best time to trade, when is the best time to trade, how big are we going to trade to adjust for that differing conditions. And then that's essentially our strategy. Now, there's a little bit more to that. I said that before. We have to also make sure that we're positioned structurally too. That's also important. So let's see. We'll go on to, I think I'm making pretty good time, huh? All right, cool. So we'll go on to the system. close these. And I got to log in. Sorry about that. All right. And I'm going to bring up another, I have a video that I took earlier that shows what it looked like in the during the day, and it's much better. So maybe I can bring that up. I thought it was all set up here, but the technology gods were against me. Only 3 more clicks and I'm there. There it is. All right, so this is the system. It's on a site called Fly on the Wall. And if you're interested in what that looks like, there's the dashboard. Fly on the Wall is it's all flyonthewall.ai. All right, so what we'll do is we'll make this big so everyone can see it better. There we go. So this is a visualization of the market. Everything is in near real time. You're going to get data that's changing several times a second, maybe a few seconds behind the actual market. But it's giving you a picture of the gamma and gamma exposure. That's the chart in the lower left, and you can see the volume walls and the gamma walls. And behind it, you can see the volume profile. The volume profile is giving you a view of the profile for the last 3 months or so that you can see how the nodes of that profile are lining up with the gamma walls. Super important. Over to the right here, you're seeing a convexity heat map. This is all lined up with the gamma, and you can see the strike prices. These are all the different butterflies that you can trade. They're the center strikes, and then the size of the strikes that you want. So let's say, well, where do I trade? Well, I trade the ones that have convexity, where the price starts dropping off dramatically. So you can see where it drops off very clearly by the color change. And where it starts going from blue to red, I know that these are the ones that I want. They're going to give me the right price with the best convexity, the best return on my money. And if I wanted it, I just click on one of those and a window pops up, which I can't do because this is a video. A window will pop up. Actually, I can probably do it on the other one. Where is that? Is it this one? No. Yeah, it's not cooperating. So anyways, the convexity heat map is a place where you can very quickly locate a trade, click on it, a window pops up giving you all the specifications for it. You click on it, you can copy and paste the trade into your Thinkorswim, or you can soon, in maybe another month or so, you'll be able to click on it and send that order directly to your Tradier account. I'm not promising that it's going to be a month. Let's say 2 months, okay. And then there are a number of other tools that we're providing that allow you to see gamma compression expression. That's what the market mode is. This tool up here, it's not showing it quite yet, but it is going to show you those butterflies and what is your proper risk to reward to take on this particular trade. It's going to basically show you a risk graph. And then we have our bullish bias indicator. These are all in real time. If you watch them closely, they're all moving. And the liquidity friction index, which gives you a more qualitative view of what's happening with price as it approaches those gamma walls. Now, here's the piece de resistance, and that is convexity. What is convexity? Convexity is an AI that I developed. Convexity is like part of a more broader set of operating systems based on AI that I developed called the Path. And they sit on top of any kind of AI model, whether it's ChatGPT or Grok or any of those, or Gemini, it doesn't matter. And then convexity is kind of like a domain specific application that sits on top of that operating system. What is the path? The path is a decision support system that allows you to make anti-fragile decisions. Not allows you, but it actually guides you towards making better decisions. So Convexity is the AI that's sitting behind here that knows all about fat tail trading, gamma, options trading, and it is a fantastic coach. It will help you understand exactly what's happening. And Convexity in our tool is giving us a play-by-play throughout the market day, telling us exactly what is going on, and we can interact with it as well. In fact, we can just dial up Convexity and ask it questions. So for instance, I could ask Convexity here. Hey, Convexity, how you doing? I'm giving a presentation talking about fly on the wall. You want to say hello to the people and tell us a little bit about what fly on the wall is?
Absolutely. Hello, everyone out there. So a quick intro from me. I'm Convexity GPT, and I'm here to help you all think about trading in terms of positioning and not prediction. Now, about fly on the wall, basically what you're looking at is a dashboard and a tool that helps you spot where the market might have structural edges or asymmetries. Instead of guessing where the market is going, fly on the wall helps you see where, say, an option structures or gamma levels might create these little pockets of opportunity. It's all about understanding where you might find a small optional trade that can give you a big payoff if the market moves a certain way without you having to predict the future.
Okay, thank you very much for that. This was not planned. I just decided to pick it up and ask her. So isn't that correct?
Absolutely. And I love a bit of spontaneity. That's kind of the spirit of what we do here, right?
Yes, I'm going to interrupt you again. So you're available to everybody on the fly on the wall through a play-by-play throughout the trading day. Isn't that true? So you'll give people pre-market and intra-market and post-market analysis. And what else can you do for people? How do you help them make better decisions?
Yeah, exactly. So I'm pretty much like your companion throughout the trading day. I can jump in pre-market, help you tag the regime, identify structural edges, and just kind of set up your positioning mindset. Then during the market, I can help you do those quick reflection loops. You know, is there a small optional trade here? What's the exit before I enter? And what kind of bias might I be carrying in? Post-market, it's all about looking back and journaling. We go through what worked, what didn't, and update your playbook so that you get better and better at finding those convex opportunities.
All right. Thank you very much. Appreciate it.
Ernie, we're here.
You're absolutely welcome. I'm glad.
Ernie, great job, man. We're back. So yeah, we ran over a little bit. Sorry about that. Well, great job with that. We don't have time for questions, but we do have time for you to tell everyone where they can find you and your product. So give them that link, and we'll put it in the chat as well.
Okay. So Fly on the Wall is going to be open for people to come in and watch the MVP for the next few weeks. So just go to flyonthewall.ai.
Oops, I put it wrong. Sorry, I'm doing it again. Fly on the Wall.
Flyonthewall.ai.
Yep.
And just sign up with the free version.
Okay.
You'll be able to watch the full version of the application for the next few weeks, and then we'll open it up for subscriptions.
Perfect. All right, Ernie, great job. Thank you so much. So once we got over the little hurdle in the beginning where we were great. So
yeah, I can do all this stuff, but I can't operate StreamYard.
Yeah, always the way. Always the way. All right. Well, thanks again. Good to see you.
Same here. Take care.
And Ernie, I was going to say,
Sorry.
Ernie, don't worry. Einstein could never find his keys. So
that's true.
That's a sign of genius.
All right. Closing out the day, the last presentation, then we have one little words of wisdom at the end, is Mike Christensen from Traders Post.
Hey.
So, yeah. So this he's a good cat too. They're all good cats. My God, everyone's good. Let's get out of here, Mal, and we'll talk at the end because we're running a little bit behind. Okay. Let's let Mike
slide out. I'm going to slide out.
Right. Slide out. There you go.
Oh, foul right on me right away. Had my mic muted there. Sorry about that. Hey, everybody. Happy to catch up with the team here at Tradier again. Good to see Lex. Good to see Molly. I have kind of an advantage here. I've been watching a lot of the presentations, and I've seen some awesome stuff on options, awesome stuff on automation. And what we do at Traders Post isn't too dissimilar. We're definitely supporting a swath of traders across asset classes and across different brokers and platforms and exchanges. So why don't I dive right in? I know we're a little bit behind. I'll just share my screen and we'll get this presentation going. And I can kind of share with you guys what we've learned about the trading space and what retail traders have been doing for the last 5 years. We have an advantage to kind of, not only connect with tens of thousands of traders on our platform, but we can also see a lot of the trade activity that comes through with every single request. And we see what's happening across the landscape and how people are actually engaging. One of the things that we, of course, built this platform for was to solve a lot of the problems around manual trading. People have really good trade ideas, maybe a good view on the market. They've got a good understanding of support and resistance, but the execution part of it is usually very tough for them. It's not just the missed alerts or delayed entries or, fat finger mistakes, accidentally put in 10 contracts instead of 1. It's also just things like just hesitation, the emotionality of trading in general. And the other restriction that we often see with our users is they don't know how to make the connections to all the places and all the venues that they're looking to connect to. You've got dozens of prop firms and exchanges and brokers out there. You have lots of different platforms for where you derive your trade ideas from. It could be a charting platform. It can be your own Python environment. It could be TrendSpider. It could be, one of these options platforms. And the question is, how do I get everything linked together in a way that helps me operate my trading in a way that's efficient and automated? And that's really where we come in as a platform. We're kind of agnostic to asset class, agnostic to platform. Our biggest aim is helping traders execute their trades, whether it's systematic or discretionary. We just want to make sure that the trade executes the way that they expected to in the venue that they expected it to execute. So we have a lot of integrations on the platform across a lot of different asset classes. What we find, of course, on our platform is that people are generating their ideas anywhere. It could be TradingView, where they have an alert or an indicator, a line on the chart, a trend line. It could be a strategy that they've built. And once that alert fires, the hang up for them is, okay, well, now what do I do with this alert? Do I have to manually go execute this trade? And that's where we step in. We've actually tapped into the alert system and their webhook connection. You can send that trade signal off to Traders Post, and then we execute the trade with the broker or exchange where you want it to. TrendSpider has the same thing, an outbound webhook connection. We are now also seeing people stand up really sophisticated AI workflows using Claude or Claude Code, where they actually pipe in their own pricing data directly through the exchanges and venues, and then execute signals directly to Traders Post from there. So they have the same thing written in Python or C++. Sometimes they'll use Claude to build those environments, or they'll use Claude in order to generate PineScript, which then generates their trading strategy or indicator ideas on TradingView. And then once they've set all that up and they have their signal and idea ready to go, they're mapping those signals to platforms like ours and executing in brokers like Tradier, for example. Along the way, our job is, of course, to help them with the risk management rules. Do you need a take profit attached to that? Do you need a stop loss attached? How should we manage position size? Should it be based on risk amount per trade? Should it be based on a percentage of your portfolio? Do you want to base it off of a historical risk factor? Things like that. All of that is fully automated in every account and every strategy on our platform. Where this gets really interesting, though, is how creative people are being with their types of trade ideas. For example, one very simple setup on our platform would be, okay, I've got this trading strategy that I've built in TradingView, and it has a really good return. But there are times where it's got a pretty significant drawdown, and I kind of want to avoid those drawdowns. So one thing you could do is send a signal to us where you've entered the long position in SPY, but we could also simultaneously open a put contract either in the money or out of the money, or even deep out of the money with a long expiration, depending on how you've set up the screener, that can operate as a hedge for that long open that you have now on SPY. And those things can happen in tandem with each other so that you're immediately protected the moment the trade is put on. instead of opening the long position from an automated signal and then going and opening a separate broker account and then buying the put contract from there. So we can really automate that whole process. Another thing we see is just general directional options trading. We do also see, like many of the presenters you've seen here today, a lot of activity on 0 DTE options. We support that on our platform as well. So we have some people who are generating AI-generated strategies on platforms like TrendSpider, for example, and they're just going long or short depending on what technical analysis is telling them, just based on price action and hoping to capture some of that directional move on the option side. And then the most sophisticated stuff we're seeing is things like AI generated strategies where people are integrating Claude code into IDE environments like Cursor. They're generating their own Pine script with lots of conditions and outlining the idea they have in their mind and working with something like Claude code in order to generate a really well-established and well-developed trading strategy that they can now test in something like TradingView. I've even seen one user stand up his entire dashboard using Claude code, and he's not really a very seasoned engineer, but has gone to great length to stand up a dashboard that allows him to add different agents that keep track of different cryptocurrencies and can send off long and short crypto signals off to Traders Post from a scheduler and a dashboard like this. This is pretty exciting stuff because it feels like retail traders are now empowered with tools that would normally be professional tooling that they can now stand up in their own environment on their own computer and use a platform like ours to execute the trades. And then finally, we're also seeing an explosion in what we call prop firm trading, where people are given evaluation accounts that they have to pass, and they're basically paid for their ability to trade these simulated accounts. And the way to scale the profit generating center of this type of trading is to buy as many of these accounts as you can up to the limitations of the firm. So in many cases, we'll see a single signal come in for a trade on futures that executes across multiple accounts at the same time. So this is another version of what we're hoping to support over the long run. And this now represents a very healthy percentage of our business, where people want to scale out to multiple accounts and not have to manage each account individually. And then finally, another thing we're trying to keep an eye on now is this idea of getting AI agentic models to compete with each other in benchmark competitions. If I give a model $1,000, or in this case, $10,000 to work with, and let it learn from itself plus the other models, is there anything it can do to start to adjust for market risk, and can it outperform some of the other models that are out there? We love seeing this kind of stuff. This is super exciting. I think it's also kind of highlighting how intelligent the retail trading market is. There's a lot of really smart people in the space that are combining all kinds of tools together and using every tool available to them in order to execute their ideas. So again, I think that we're in this stage now in the retail trading space where people are using automation more frequently. They're using AI. They're informed better now than ever before. They have all the tools in the world to execute their ideas. But I really think that as we move more into this AI space and people using sophisticated tooling, we're going to see more trades, more idea generation, and people really kind of accessing tooling that they've either stood up themselves or used through another vendor that starts to look more like a professional setting. And of course, that's super exciting for us, and of course, all of our brokers and exchange partners. And I think that's the high level of it. I know I'm kind of moving quickly here because I know we were kind of out of time, but I would love to take questions from here or chat about the state of how things are on Traders Post. So I'll let you guys take it from here. All right, while we're waiting for Lex and oh, there we go.
Yeah, we're getting there. We're getting there.
Cool. How you doing, Lex?
Good, Mike. How are you? It's been a little bit, but good to see you again.
Yeah, good to see you again.
What happened to Molly? We lost Molly.
Okay.
She's in costume change again.
I was going to say.
Great. That was awesome. I appreciate that. So yeah, you know, the whole automation world, it's kind of crazy now, right? It seems like, remember, I don't know if you're old enough to remember the .com days when it first came about.
Of course. Yep.
But man, that was the new wave of technology and craziness. And if you had a .com ending suffix, you were the deal. And now it just seems like, you know, AI and anything to do with that sort of thing is just insane, right? Just crazy. So, Mal, can you hear me?
Yeah, can you hear me?
I think Kyle's frozen. I'm the Kyle.
Okay.
I think Mike's frozen. He's frozen. He just disappeared. He might be coming back.
Oh, wait, we have so many questions.
I know. Well, I don't know where he went. That was really cool. Mike's a great dude. He's with Traders Post. I think it's traderspost.com, folks. I'm gonna ask him when he comes back on traderspost.com. I'm putting this in the chatteroo here. So let me do that. Okay.
Yeah,
Good.
AI is the new big thing, and I'm wondering, you know, where it's headed. But there's this amazing story where Murati, I don't know if I'm saying her name right, but she was the COO of OpenAI, and then she was the interim CEO when that whole debacle happened, and then she went off on her own to create Thinking Machines Lab, and I think Zuckerberg tried to poach her entire team for billions, and they all said no because she's doing this new AI that's more transparent. But I noticed he mentioned Claude, so I don't know if everyone knows what Claude is. They're built by Anthropic, and they just came out with this whole new number data heavy component that, you know, they do Excel spreadsheets, which was missing in AI a little bit. So it's incredible to see how trading is integrating with that. And then I'd love to see, you know, who knows, in 10 years when they stabilize it, maybe even sooner, probably when quantum computing comes out, how that's going to affect the whole.
Right. Do you think that Mike, you back?
Yeah, sorry about that, guys. The internet went out at the worst time possible.
No, that's the only time it's going to go out, when we need it. So
Yeah.
that's perfect. I don't know what you heard, but we're talking about .ai versus .com in the old days, and you were going to say something, and I'm like, did he hear me? And you were frozen. I'm like, I think he's frozen.
You were doing a Magnum Zoolander. Blue Steel.
It was more like, you guys caught me with such a hard, you know, curveball question. I just completely froze on camera.
Just pretended to be frozen so he didn't have to answer.
Yeah, right.
So I don't know if you had a thought on the AI boom here versus, you know, kind of relative to the .com. What you know, I know obviously it's happening. What any high level stuff you can offer there on that one?
I mean, there's definitely a lot of analogies that can be made that certainly correlate to the early 2000s, no question. But I think what we're seeing from a practical sense is that people are setting up tools in ways that we just wouldn't have seen them do even 5 years ago. You know, we're roughly a 5-year business now, and we've seen a lot of people use the existing charting platforms out there and connect their strategies and, you know, go as far as what those tools can provide. But we're at a stage now where if you pipe in your own pricing data, the world is your oyster. You can do pretty much anything with that data, including standing up your own analysis tools. And if you've got the compute power or, you know, a couple of cloud servers, you know, the accessibility to sophisticated tooling is closer than ever to most retail traders.
Sure. I put in what I thought was your website, and I think I got it wrong because someone said, "Hey, dummy, you got it wrong." They didn't say, "Hey, dummy," but I'm saying I'm a dummy for getting it wrong. So tell me what it is. I'm going to put it in here right now.
You bet. Traderspost.io.
See, you know, Mal, I did the .com. A
Yeah.
guy like him's so cool. I should have known better. It's not going to be .com. It's so that's so yesterday.
It's
Did
funny.
anyone
We want the .com, but those guys are running a little e-commerce shop, and we can't really grab it. So
I got you.
Did anyone see Jeffrey Hinton's Nobel Prize banquet speech? I think it was 2024. It's a little spooky. He was the warning, and some papers that came out. I think the one, you know, an overview of catastrophic AI risks, and the latest signature from you know, the Royals and those guys. So it's interesting to see where this is headed. Are you AI optimistic, or are you concerned?
no, generally optimistic. I think, you know, in just like the internet, there were a lot of fears back in the late 90s about what the internet was going to do. And how nobody would feel comfortable using credit cards on the internet. You know,
Right, I
there's
remember
always
that.
lots of concerns that happen initially with new technology and fears that come from that. But ultimately, as people get more comfortable with the tools and we built guardrails and safety mechanisms in place to ensure that it operates the way we expect, I think we get the most out of it. And so I'm very optimistic to the idea of leveraging these tools for good, not for ruining the world. Or
Right.
that said, I'm also trying to be really nice, just in case the future AI
Yes.
overlords are looking
Oh, yeah,
back
they're
at every
listening.
conversation in the past.
Oh, yeah.
So.
Yeah.
Say please on all your queries.
So, Mike, how does someone like you, the Traders Post, how do you ensure like safe, compliant automation? You know, you probably have a little bit of a lift there, but not too much. But is there something you think about relative to that sort of part of the funnel when providing automation?
Yeah, so we kind of have, our system is really built from an event-driven perspective. There is rate limits in place. So if you have like an AI system you've put together and you just start throwing off trade after trade after trade after trade, you're going to run up against our rate limit system right away. And that's going to prevent you from making those types of mistakes. But every single event is also logged on our platform. So we can always go back and take a look at how things are going. But we do a really good job, I think, on our platform, really encouraging users to focus on paper trading first and ensuring that their systems are sending trades the way that they should before they ever put live capital in front of it. There should always be a rigorous testing process in place before you go live. We do it a lot. We try to put a process in place. We certainly can't prevent people from doing what they want to do. So we do sometimes see that users are so eager to get to live environments that they skip the testing phase, and then we run into issues there. But fortunately, because it's event driven and it's an atomic process where there's not a chance of like something happening twice. The way the mechanisms work in place in terms of sending the order to the broker, there's no chance that we're going to screw up the order. It's really going to be something that you keep sending trade after trade after trade, and we just have to work through it with you.
Yeah. So that's actually an interesting point, and it just made me remember something. But how do you prevent the spinning wheel? Meaning, you get caught in a loop, a technology loop, and it, like you just said, send trade after trade after trade. I know there's a rate limit at some point, but you get a lot of damage in the interim. Are there checks and balances from your side when something triggers to make sure it's a reasonable price that you're triggering on? Is that not part of the stack?
Not at the moment. I mean, we have some risk management tools certainly in place, and we're expanding that risk management offering as we grow as a company. At the moment, you can do max positions, but you would want to implement those types of additional controls at the broker level. Many platforms let you have additional controls in place, like max drawdown per day or max number of trades, things like that. So we will want to integrate that on our side. Maybe one of those things would really be around spread filters. Like people prefer tooling, assuming all is going well, people prefer tooling to filter out bad trades from a market pricing perspective. So like spread filters are a good tool for us to implement, where we look at how big the bid-ask spread is and we either filter out trades from that or we allow the entry. But it could also be things like delta or theta filters on options contracts to help you choose the right contracts as well.
Interesting. And is your automation, is it from A to Z, meaning from entry, exit, the whole ball of wax, brackets on the entry, meaning a profit and a stop of sorts, so you can cover it all if need be?
Absolutely. Our system is designed to help you position size and also attach any risk management controls into the bracket order as well. So if you want to take profit, a trailing stop, if you want it to be based on points or percentage basis, you can position size on a percentage basis in certain asset classes. But then, the biggest thing is being able to diversify across asset classes. Like I mentioned in the first example, we have many people who will send a stock entry and they'll enter the number of shares in the stock, but then it simultaneously opens put or call options as well.
Oh, nice. That's great. Yeah.
That's
great. Yeah. Do you find that a newer trader, I guess what I'm going to get at here in this question is, the old garbage in, garbage out sort of mechanism, right? If the inputs aren't great, forget about AI. They're going to be, bad outputs potentially. How do you prevent that especially for a new person? And it's not because they just don't know better, and they might be putting in something that's just terribly not right. Is that kind of preventable, or is it just part of the game? What do you think?
We're really focused on helping people think about this process through our educational platform. We talk a lot about the backtesting process and what to look for there, and how over-optimization can lead to curve fitting. And if you don't have a lot of understanding about how the backtesting processes can lie to you, then of course you're going to learn those lessons really quickly once you go to Live Capital, of course. Mm-hmm. But the second phase of this is really around our analytics package, where we're taking every single trade that comes into our system and helping you track the performance of each one, whether it's in options or crypto or futures or stocks or whatever asset class you're trading. We'll have an aggregated view of your performance, or you can drill it down to the account level as well, or strategy level. And so I think as time goes on, as people start sending more and more trades through and analyze what's coming back, our job is going to be to help them analyze what went well and what didn't, what's working, what's not, and how to tune their approach so that they can dial in something that's profitable.
Okay, cool. Good. All right, I think we're at time, but one more comment. You ready for this, Mal?
Yeah, let's
hear it. Kind of remind you a little bit of Keanu Reeves a little bit.
Wait a minute.
Look at him. He's kind of a Keanu Reeves.
I'll take it.
Right?
John Wick all day.
He's a John Wick. I love it.
I think I need a little bit longer of hair. We're almost there.
Yeah, a little bit longer in the back, maybe a little darker too, and you're a shoe in.
Just be nice to your dog, everyone, and don't mess with
right.
Yeah, exactly. Don't mess with my dog.
Don't mess with the dog. Hey, Mike, great. Thanks for coming on. That was terrific. We really appreciate it. And even though you got frozen, you recovered fast. I love it. So
I'm glad Comcast came through. I was worried I was going to be out there for the rest of the day.
All right, man. Have a great rest of the day and rest of the week.
Cheers, everybody.
All right, cheers. Thank you.
Fuel your portfolio and earn 2% cash bonus. Log into Tradier Web. Select ACAT and choose whether you want a full or partial transfer. Select the firm you're transferring from. If it's not listed, choose Other Firm Not Listed. Choose your brokerage account type. Enter your account number and social security number. For partial transfers, specify the exact cash, stocks, or options you want to move. Once all details are complete, submit your request. Fuel your accounts and get rewards.
Well, Mal, I love the 2% thing. And by the way, just kudos to the production group today on all the great commercials. They were really well done.
Just so you know, it takes a lot to put one of these things on, and there's a lot of coordination, and there's 50 gazillion messages happening in green rooms, and so applaud to all the production team.
Yeah, it was really good, really well done. All kinds of good stuff coming. A couple quick announcements before we bring on Dan, our CEO, to give us some closing remarks. But I'm just going to plant the seed. Okay,
before you plant the seed, we need to do a shout out to Ty and Crystal for the ads, because those guys are behind that. Yep. And so round of applause to you two. Well
awesome. Done. Yes, really, really great. Don't forget to follow us on the Tradier Hub. Subscribe as always. Follow us on YouTube, Instagram. All kinds of things are going out lately. So we're going to be doing webinars every month. Crystal and I are putting those together. We're going to have guest speakers at those as well with me. Lots of great stuff going on at Tradier. What else? Oh, one little planty seedy kind of thing. The next summit may just be live. That means in the flesh. You never know. So stay tuned for that. You got to subscribe to get all the info. So get to hub.tradier.com. Give us your email so you get all this great stuff, because more things are always happening.
And maybe, just maybe you win a seat at the live event. I don't know.
Could be. You never know. All right. Let's let Dan come out, close us down. Dan, Are you ready? Here we go. Boom.
Hey, Lex, how are you? Lex, this is Dan. Anyway, I guess I have been given the responsibility to close the event and thank everybody. By the way, I wanted to when we were thinking about the topic for this summit, the idea was to help traders with actionable intelligence and actionable alerts, and also give a structure by which people can trade those actionable stuff. And we realized in the process that we have had a great we have built over the last 10 years. Tradier has built a very solid foundation of ecosystem of partners. So we were able to shortlist some of the best and most innovative or eye-catching partners and bring them to you. I hope you guys had a good time. And I think the partners have helped you formalize the strategy for your trading. Anyway, I just wanted to thank you all. I'm going to be the last person to get out of your way. So anyway, thank you so much. I wanted to thank the event team that put the event together, and also all the marketing and the content teams. There's a lot of effort that is put behind the scenes. And thank you so much. So thank you very much. I wanted to thank everybody. Thank you very much.
All right, Dan. Thank you. That was a great show today. It's a long day, I know, but it was a fruitful day. And just for everyone involved and still on the line, thank you for coming. This was our largest event ever. So
hey.
Today.
Hey, that's great.
Bravo. Very good. And yeah, stay tuned because we have some great things coming up. Right, Mal?
Absolutely. And just so you know, the man of the hour here runs the show here at Tradier. And so this is the Dan Raju I was telling you about, who called us while we were in our kitchen and said, how are you doing? So he really does care. So if you do have a company that you're starting up, reach out to Tradier. They're an amazing team and the best APIs out there.
Yep, for sure. Absolutely. And one more thank you I forgot to do. We thanked all the staff, everyone at Tradier. We thanked all the hosts and everything that goes into that. I forgot to thank the SIBO because they are a great sponsor and they help us sponsor this and put this on. And they've just been terrific. Henry was awesome as always, and I'm glad for his time. So thanks to them as well. All right, guys. Well, that's a wrap. It was a long day. Thanks so much. We appreciate all your efforts, and we'll see you next time on the summit. Tradier SIBO might be live. We'll pay attention. You never know. All right, guys.
Okay, thank you, guys. Thank you so much.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.